Currency, but it isn't enough to prevent shares sliding in extended trade. And BP is starting share buybacks in the second quarter. That's after a spectacular net income beat in the first quarter. We'll bring you more from our conversation with the CEO, Bernard Looney. Welcome back to the programme, to the second hour of the European Market Open. Let's have a look at the futures and where we're positioned fairly flat right now. Eurostoxx 50 futures showing a little bit of downside. London perhaps might see basic resources getting a bit of a boost as a result of what's happening in copper markets and more broadly around commodities. It's certainly been a talking point for many days. It's something that moved equity markets at the start of the session yesterday. We'll see what it does to markets this morning. European markets then just getting opened up this morning, just coming out of the gates. The FTSE 100 up by 0.1% is the first to open. We'll wait for some others to catch up. The Stoxx 600 first print is fairly flat this morning. It's been a really busy earnings story, a busy earnings day. As we mentioned in our headlines, numbers through from BP, numbers through from HSBC and UBS in the banking sector. So we'll look for the individual responses in various stocks to that news flow. We see the CAC 40 opening fairly flat. The IBEX opens 0.2% to the downside. And I'm just looking for where we're seeing some of the earnings stories being reacted to by investors. Well, investors certainly reacting very strongly to the BP and the UBS news flow this morning. BP up by 2.9% after they pleased investors with that return of cash. And UBS to the downside, down by 2.8% after the surprise hit from Archegos that had not been flagged previously. So European equity markets reacting to the earnings stories, but in the round, fairly flat this morning. We're not going anywhere really on the Stoxx 600. So there's a focus on the earnings story. There's also a focus on the health crisis. Emerging economies from India to Brazil are grappling with the health crisis. The developed world is on a firmer recovery path, though, with a faster pace of vaccinations. Data from the US is expected to show annualized growth of 6.8% in the first quarter, but it's not shifting the Fed's accommodative stance, with the central bank expected to keep rates on hold and asset purchases unchanged at this week's meeting. Let's get an investor perspective on what's driving markets right now. Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy, is with us this morning. Esti, very good to speak to you. So I wonder if I could start by what you think is in the driving seat for investors at this point. Clearly, we have still very sad stories coming through to us from India and some other parts of the world with regards to the pandemic. Clearly, it isn't over. But what is in the driving seat when it comes to investment right now? Is that story? Is it the earnings story that you're focused on? Is it what we're going to hear from the Fed this week?
Good morning. It's a combination of all of the above. I think for now, while the situation in India is very concerning, it isn't spilling over to the rest of the global economy. It isn't bringing into question the U.S. reopening. European vaccination is a couple months behind, but improving and accelerating throughout the second quarter. So at the moment, it is a little more about earnings season. We tend to focus, of course, on guidance and what the rest of the year might look like. But you also want to see how stocks are reacting to the news. Some stocks that had very strong earnings results didn't perform as well. We want to make sure that doesn't become a trend. We have a couple of big names coming out throughout this week. And of course, all eyes on the Fed, although we do not expect much news from the Fed this week. I think markets are thinking that we'll start to hear about tapering potentially in June, more likely at the Jackson Hole meeting, and the Fed trying to lay out a bit of a plan. But always a focus there, but probably not very market moving this week.
We're not far from record highs for European equity markets, are we, Esti? And I wonder if that makes you nervous, or rather, what makes you nervous? What's your biggest worry when it comes to what could knock markets at this point?
That's one of the big questions. I think the complacency is probably what I find worrying, and I don't think we're there yet. There are a number of indicators that show that markets are very optimistic. They are quite aggressively positioned, but there are just enough indicators that are saying that we're not at extreme levels. Hedge funds aren't very aggressively positioned. We still have a lot of money in money market funds, and that's much higher than where you would expect it, given the reopening that we're seeing. And more from conversations with our clients, there are worries, whether it's an inflation worry, a COVID worry, a vaccination worry, a geopolitical worry. There's just enough that makes me believe we're not yet into complacency territory, but that's something we want to keep in mind. Now, more broadly speaking, we don't think that just because you're towards a high, that it means you have to have a correction.
Okay, that's interesting. Let me ask you about the financials then. We've had earnings out from various banks this morning, HSBC, UBS, we've already heard from Credit Suisse, and expectations, I suppose, for the sector for underlying performance, specifically or particularly in trading and investment banking, expectations were high, weren't they, Esti, given what we'd heard from US players in this space. Do you think broadly that banks are living up to expectation?
The expectations were definitely high, and we saw very strong results from the U.S. Interestingly, that's also where you had it translated less into stock performance because there was a lot of focus on the net interest margins, and if that should have been better with the rising yields. I think in Europe, we really have a European Central Bank trying to protect the banking sector, helping to protect them from negative rates. We saw the move in yields. We saw reopening plans. We might need a little bit more of this reopening picture to become more concrete for Europe, given the slight delay to the vaccination effort here. But generally speaking, that we expect financials earnings to continue to do well and to really benefit from this reopening and reflation trade, which we think will gather speed over the coming weeks and months again.
And do you expect, Esti, financial conditions to remain easy? According to Goldman Sachs, they are the easiest on record. Is that something that you expect to be maintained?
For now, absolutely. We saw a very big move in yields, particularly in the U.S., financial conditions remaining very easy. That's one of the reasons we don't think we're going to get so much new news from the Fed at this week's meeting. Real yields remain negative. Mortgage rates have gone up, but the housing market's still doing okay. And financial conditions are, right now are set to remain quite easy. And that's one of the reasons why the Fed isn't in a hurry to move.
We had numbers out from, I mentioned the earnings story from the banking sector. We've also had numbers out from BP this morning, and the share price reacting positively, up by 2.3%. Away from the specifics, perhaps, of BP, do you think the sector as a whole is going to manage to reward investors whilst transitioning to become something very different, from big oil to big energy in some sense, Esti? Is this a sector that you can maintain exposure to through that transition?
So that's one of the questions we have to see, and it really will depend on individual companies and how they're doing. But while their biggest business for a lot of these is oil, we have seen a move towards renewables. We have some of these that are leaders in renewable energies that are working on new technology that are really ahead of the game for that. So there's no reason to think that the sector in itself is, at risk. In the shorter term, again, this reflation trade isn't over. Energy prices have room to move up as we start to travel more, as we get more vaccinated, as tourism can pick up again. So we'll have to keep an eye on the medium term. We'll have to see if it's, in and out, I'd say, in terms of allocation, whether rather than just a steady allocation. But for now, the outlook is still pretty good, and I wouldn't underestimate some of their capacity to adapt.
Okay, Esti, thanks very much. Stay with us. Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy. More from Esti a little bit later on in the programme. Just want to get some breaking news coming through from UBS. It was clear that investors had not anticipated the size and scale of the Archegos hit that was reported by UBS in the last quarter. And so that prompts the question, well, what in the next quarter? How much of this lives on into another quarter of reporting? Well, UBS saying this morning in a red headline across the Bloomberg confirms the CEO sees $87 million in trading loss in the second quarter from Archegos. So that is interesting to note when you're thinking about what legs into the second quarter that Archegos story has. Coming up, we'll stick with the banking theme. Swedbank net income beats estimates for the first quarter. We will speak to the Swedish lender's CEO, Jens Henriksson. That is next. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
A big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Welcome back to the European Market Open. 11 minutes into our European trading session that's fairly flat overall. Some interesting, really interesting individual share price movements, individual stories connected to earnings. And let's get back to the bank earnings story now. Swedbank's net income came in better than expected for the first quarter. Results were boosted by lower credit impairments and stronger performance from its asset management division. But the Swedish lender also said it failed to defend its dominant position in the domestic mortgage market. Lots to talk about then with the president and CEO of Swedbank, Jens Henriksson. Jens, good morning. Thank you very much for joining us. So let me focus on the beat, the net profit beat that you delivered, lower credit impairments, part of the story there. What drove that? What enabled you to be more positive on that credit impairment story?
Well, first, good morning, Anna. And let me say I'm proud today to present a result that's 10% stronger than last quarter. And I think that's done in a challenging and tough time. If you look on credit provisions, we've sort of credit provisions that are half compared to last quarter. That's one explanation why we are delivering a good profit.
That is one of the reasons. And what was it that delivered that, though, Jens? Why were you able to be more positive on those credit impairments?
Well, what we've seen a development is that where we have not seen sort of really what we expected when it comes to credit losses. So we've actually put aside a good margin of 1.8 billion Swedish kronor in excess of what the models have told us. And that means that we have a good safety buffer if the economy would worsen. But so far we have not seen that many problems.
Okay, so things have been maybe better than you'd anticipated. One area of things to work on, I suppose, Jens, that you acknowledge is the Swedish mortgage market. I wonder what you need to do, what you need to change then to be able to meet customers' expectations on shorter lead times for mortgages, because that seemed to be something that held things back.
That's correct, Anna. So we've seen an increase year on year with our mortgage business of around more than 3%, but the market has grown with 6%, so we've lagged behind. And the reason for that is a very fast-moving market in Sweden, in the housing market. The prices are sometimes going up to 20%, and that means many customers, they want to do a quick decision, take it before the flat or the house, before it hits the market. And we've not been prepared for that fast movement. So what we're doing is we're stepping up, taking decisions on how to increase sort of our availability and shorten the lead times.
Okay, so something you're working on. I want to get back to something that's been part of the conversation with you and the business for a while. That was the money laundering story, and you've paid a fine there. You've paid the Swedish FSA the fine that was demanded of you. Are you concerned about a US penalty? I know it's being looked at still. What can you tell us about timing or scale and scope?
Well, I'm always concerned about sort of when different authorities are looking upon us. And the US authorities, were in discussion with them. I have nothing new to report on this. And if there is a new development, I would come out and give that information immediately.
So nothing new on that. You're having to invest, though, I understand, Jens, on controls, on trying to make sure this doesn't happen again. Can you give us an update on the ongoing investment that you're having to put into the business to enhance those controls?
Well, as you know, we're not good enough when it comes to internal controls and governance, and we invested heavily in that. And there are a lot of people within the bank working with this, both taking care of our historical shortcomings, working with the ongoing flow, and making sure that we are an industrial leader in this area in the future. So we are investing first now in the short term in people, but they're also building up automated systems, which I think can strengthen us a lot in the future.
Can I ask you about your ROBA business, targeting the Baltics for expansion, I understand from colleagues. Will the bank hire more people? What kind of growth do you foresee? How big can this business be?
Well, if you look on sort of the savings business with Estonia, Latvia, Lithuania, it's not where I think it can be. If you compare it to Sweden, it's much less developed. So we're putting an emphasis on that. I don't think it's so much about hiring new people. I think it's about taking the opportunities when we meet our customers and to tell the difference it makes of having a few euros on a bank account with zero interest rather than to invest in a fund where you can see an upside.
Okay, important to get that question to you around that asset management business. Jens, thanks very much for joining us. Jens Henriksson, the Swedbank President and CEO. Coming up here on the European Market Open, Prime Minister Mario Draghi in Italy has just a few days to define what he calls an historic plan to rescue the country's economy from the pandemic. More on that next. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the European Market Open. 20 minutes into the European equity trading session, and we're fairly flat overall. The stocks Europe 600 fairly flat this hour. US futures had been pointing more positively, and they continue to do so, maybe off earlier highs, but still up by 1/10% or so on the major markets in the United States. Let's dive into some stock specifics, though, because there are some really interesting stories under the hood, if you like, or under the overall indexes here in Europe, and this is just a few of them. HSBC, the share price move not all that substantial, but we did see the shares climb in Hong Kong and to some extent here in London, as you can see, on the back of that pre-tax profit beating estimates coming through from that the big banking business. They've got no current intention for share buybacks this year. The cost reduction plan is on track. We see UBS under pressure, down by 2.9%. It was the surprise around Archegos, the size of the hit in the first quarter. They've given us a detail, a number for the second quarter as well, much smaller, of course, than the first quarter, but still some guidance as to how much of an impact this is going to have on the business. And that did seem to be a surprise to markets, and you can see the response there, down by 2.9% for the shares. A surprise to the upside for BP in terms of the net beat from that business. That stock up by 2.75%, but also the return of cash to shareholders, back part of the conversation from these big energy businesses, even as it tries to transition from big oil into a more diversified, more sustainable energy business. Now let's get back to some of the geopolitics around Europe. Italian Prime Minister Mario Draghi has just a few days to define what he calls an historic plan to rescue Italy's economy from the pandemic. That's as the government prepares to invest 261 billion euros, heavily backed by European Union funds. Let's get some thoughts on the significance of all of this with Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy. Esti, we heard there from Mario Draghi yesterday, and one of our guests in the last hour was saying that the size of this plan from Italy is staggering, to use his words, but he wants to see that this isn't just going to support the short term, but have some long-term impact on the prospects for the Italian economy. Are you looking for the same thing?
Absolutely. You know, there's a lot of benefit of the doubt for Mario Draghi, from markets, from investors. We know he's working to have a plan that can bring reform to Italy. He really has an opportunity that he has the buy-in from so many different sides, and he can get this very big support from the EU Recovery Fund, with these funds being allocated to specific sectors to reform and really transform the Italian economy. Now, it's never as simple as allocating the funds, but there is this view that if someone can get, again, enough buy-in from the different sides to get things moving, it is Mario Draghi. So a little optimism embedded into that. And of course, then we have to see the fine print and how that is going to develop, and whether that can work over the very long term. But it really is putting the EU recovery funds to work in the way they were meant to.
Yeah, and we're going to hear from Schulz and from Le Maire, so from Germany and from France, on how those countries are going to spend their recovery money, hear about their recovery plans. And we also understand here at Bloomberg that Poland is set to ratify its EU pandemic stimulus plan, even though they didn't like some of the strings attached with regards to rule of law initially, Esti. Does this give you a sense that we're past these political obstacles that were maybe blocking movement on the recovery fund, and that it will be something significant. Is it still investable, this recovery fund for Europe?
Well, a lot of it got priced in when the headlines came out, excuse me, almost a year ago. But now, there were questions, there were hurdles. It took a long time to get this ratified in the first place. Of course, when you see how long this pandemic has lasted and the cost it is having on economies, it isn't surprising to see more and more buy-in from the different economies thinking, we have, and compared to the US, right, where you have this massive fiscal stimulus happening with the Biden administration, to have the fiscal impetus come back to Europe a little bit for 2021, 2022, and beyond, this recovery fund really brings a lot of possibilities. So there are a lot of damage still to repair from the pandemic. And if you can get these funds, I think we're going to start to see some of that impact come again for Europe.
Let me ask you about the inflation story and how dominant it is at the moment, Esti. I see a red headline across the Bloomberg says soybeans extend their rally to the highest since 2012 in Chicago. Now, that might be a bit niche, but we spent a lot of time talking about agricultural price inflation over recent weeks, and certainly around metals, copper, iron ore, and the like. How much is this feeding into an inflationary theme, Esti? And crucially, I suppose, how long does that last for? Because many people expect short-term inflation for the global economy, but how long-lived, how sustained will that be?
Exactly. That is the question on everyone's mind. Now, the agriculture, the commodities story is somewhat different just because it doesn't factor into the core inflation prices to the same extent. And that is what the Fed is looking at. So that is where the focus is. But we think commodity prices can continue to move up with the reopening. We think the reflation trade is going to pick up some speed again in the coming weeks and months. But we don't think we're going to have spiraling inflation. I do not believe that by 6 months from now, by the third quarter, fourth quarter, we're going to have really high concerns about inflation. When you look at core services inflation, ex energy, you really see that that's where historically you've had the stickier and higher inflation. And it's dropped very sharply with the pandemic. And that's also the sector that is taking the longest to recover. We've seen manufacturing come back everywhere much faster than services. In the U.S., reopening is going well, but some of these lower wages sectors, some of the minorities unemployment, all of that is still in those services sectors, and it's going to take some time to recover. So inflation shouldn't spiral, but it is set to remain high, at least in the second quarter.
Okay, important context there. Thanks so much, Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy. Thank you so much for joining us. I look forward to speaking, or the team will speak to Esti on Bloomberg Radio. That is coming up shortly. This is Bloomberg.
Renewed global attention on the fact that the efficacy levels of Chinese vaccines have not reached the levels that we've seen from the mRNA vaccines in Pfizer and Moderna, and even Russia's vaccine. All of these have efficacy levels above 90%, but the Chinese vaccines are ranging between 60-something% to just below 80%. And specific attention is being paid on one Chinese vaccine, Sinovac. This vaccine has been proven in a large-scale Brazil trial to have an efficacy level of just above 50%. 50% is the minimum threshold that regulators will accept for approval. So that is concerning, especially because this is the Chinese vaccine that's been distributed most widely around the world. A lot of developing countries like Brazil and Indonesia are dependent on this vaccine. So questions are starting to mount on how is this going to affect the global immunization effort. But what's also really important to keep in perspective is that the 50% efficacy rate is looking at all symptomatic disease, even mild sickness. And the truth is that all the vaccines we have out there right now, including the Chinese ones, are nearly 100% effective at preventing hospitalization and death. And those are the two most important things: bring down serious sickness, bring down fatalities. We're still going to see that happen around the world, and that's why it's really important for people to keep getting vaccinated, even if the only access they have is to a Chinese vaccine.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. Half an hour into our European equity trading session for this morning, and we see that European equity markets are fairly flat actually this hour. A little bit of upside coming through on the FTSE 100, but elsewhere we're flat. We've had plenty of earnings stories though that are moving the markets, and indeed we've got the story around the earnings story to cover, but we've also got the commodity story to factor in. Let's have a look at the sector picture and see where we are for you on these various sectors right now. Travel and leisure to the upside, but actually it is more leisure than travel that is helping to move things a little bit higher this morning. We have Evolution Gaming over in Sweden, this casino and gaming business coming in with numbers better than expected. To the downside, we have the mining sector, where we have BHP and Rio to the downside. So despite the fact we're talking a lot about higher commodity prices, that is not lifting the mining space today. BHP and Rio and Norsk Hydro move a little bit lower. I should also just mention a red headline across the Bloomberg tells me that Sweden's Riksbank has left its key rate unchanged this morning. So we were waiting for a decision from the Riksbank. We have that this morning. Unchanged is the policy conclusion coming from the Riksbank. Let's get a look at some of those movers, though, this morning. Back to the individual stocks that are moving us around. Danny Berger has a breakdown. Danny.
And a DSV Panalpina, one of the biggest gainers so far. This is all deal news. They're buying a business from Agility. It's one that's going to give them more sea and air transport exposure. Danske Bank analysts writing that overall this is positive. It's more diversity for them. The price tag on that deal, $4.1 billion. That's an all-share transaction. Now, if you're looking at the biggest movers by points, DSV is going to be one of them, but BP, the other biggest mover by points. This is all about that $500 million buyback. This is going to get markets excited because when BP had previously cut their buyback program, it sent a lot of investors away. It's one of these companies that you want that payback, that payout to shareholders. It's why a lot of people own it. So this is going to get people back into the stock. Now, to the other side is UBS. Overall, very strong numbers. Their wealth management division looked good, but it's going to be that surprise from Archegos that's sending shares down 2.7% in the first quarter, a $774 million hit. The earnings call is going on right now. The CEO saying that another $87 million is going to be felt in the second quarter from it. You have to wonder if they'd announced these numbers sooner, or at least warned of it, would it have fallen as much? Now, a quick look on the overall market. We are looking at U.S. futures pointing higher. It's certainly an earnings story, but we're getting so many beats. According to Bank of America, sentiment on earnings call are the most positive it's ever been. At the same time, we have that commodities rally. It's not just copper that you see up there. It's also soybeans at the highest price since 2012. So it's soft commodities. At the same time, Bitcoin getting a bit of a bid. Of course, that comes off the back of Tesla earnings and Elon Musk talking up Bitcoin as he likes to do, and the money that Tesla made from selling some of their cryptocurrency. Anna?
Yeah, really interesting on Tesla and Bitcoin. Danny, thanks very much. One of our colleagues, really interesting, writing a piece. This was from Liam Denning, talking about how you need to adjust, not just for the regulatory impact or the credits that Tesla receives, but also adjust for Bitcoin in the final numbers, of course, from Tesla. Lots to talk about on that subject as we go through the week. Let's get a Bloomberg First Word News update. So some of the big stories we're covering here at Bloomberg this morning. Here's Laura Wright.
Thanks, Anna. The US says it will share its entire supply of the AstraZeneca vaccine and others, totaling about 60 million doses. It's also preparing an aid package for India, which is facing the world's largest surge in COVID infections. The announcement reflects growing pressure on the US to do more to help other countries jumpstart their vaccination campaigns. Germany plans to open COVID vaccinations to all adults by early June. It also wants to allow people who've been fully immunized or have recovered to be able to go shopping without needing a negative virus test. The nation's vaccine campaign has been speeding up. It took 3 months for 10% to get their first shot. The next 10% took just 3 weeks. Hong Kong homeowners may sell as much as $19 million worth of property as residents emigrate to the UK. A Bloomberg intelligence report says 13,000 to 16,000 households may move to Britain this year. That's about 1% of households living in privately owned homes. Property listings at the city's largest real estate agency have surged 44% from last year. Global news 24 hours a day on air and at Bloomberg. Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. Let's get back to one of our big themes this morning, and that is earnings from the banking sector, to the European banking story. We've been speaking to HSBC, to UBS this morning already. HSBC earnings more than doubled in the first quarter as the bank reversed credit losses. The CFO, Ewan Stevenson, told Bloomberg it was the best quarter since the pandemic.
When you look at our core lending platforms, mortgages have continued to remain robust in places like Hong Kong and the UK, and we're also seeing a really strong recovery now coming through in the pipeline and commercial. So pleased with the results and cautiously optimistic on the rest.
Disappointed at the situation. We're taking it very seriously. We're reviewing the different prime brokers relationships as well as the GFO, the family office relationships, reviewing the risk management processes as well in order to get the lessons learned out and make sure it doesn't happen again.
Will you reduce leverage and reassess how you lend to the prime brokerage or to the family offices?
Well, I think if you take the lessons learned up to now, there is certainly two elements that we are picking up. So the first one is the level of transparency in some of this business, as well as the concentrated positions that were built up vis-a-vis the leverage, I guess. So it's a combination of those that we have to take into account going forward.
Will you demand greater transparency from those family offices going forward?
Absolutely, absolutely. That's the big lesson learned here. It's not only that we should demand it, and all banks should demand that. It's also that we should look at regulations to come in here in order to ensure that an idiosyncratic event like this doesn't happen again.
Will you cut leverage to the hedge fund business in the investment bank?
Not necessarily. I do think you have to be very selective and very prudent around that. We have strong client relationships. We have a strong business here. The prime brokerage business itself is strategic to us. The capabilities.
You're still fully committed to PB?
Absolutely. The capabilities underlying prime brokerage business are important to build up your wealth business going forward, and therefore we're committed to it strategically. But again, we have to take the lessons learned and make sure that we do it good for going forward.
Well, $774 million is $750 million. You're going to do a conference call. Why did you not disclose this number sooner?
Well, you're referring to a gross number. The net number is 434. In view of the very strong first quarter results, we felt it was not required at the time.
You're also mentioning the buyback. When can we expect buybacks to restart?
Well, we announced the share buyback as a program until the end of 24 in the size of 4 billion Swiss francs. We have performed on that in the first quarter, and we will continue going forward, and we will be in the market this week.
You're looking at risk more than ever before. Are you worried about quoted equity markets? Are you worried about any frothiness in these markets?
Well, it's clear that if you look at some of these peaks that we see in the markets or in specific share prices, I think we are getting close to the peak of things. Some areas are still attractive. Some areas are getting close to a bubble. Some are too leveraged. So you've got to be really careful now as to how you go
What do you think
further.
the bubbles are, Rolf?
I think there is certainly bubbles in some asset classes. And if we see asset classes that need a bit of leverage or need cheap financing, so across the globe, I'm sure there is areas in real estate where there is bubbles.
Well, that takes me very nicely. You know, you're settling in to floor 3, I believe. Very nice floor. When do you expect the majority of your staff to be back in the offices around the world?
Well, expect is something else than hope. And the majority, I would hope, certainly into the 3rd or 4th quarter.
That was the UBS CEO, Rolf Harmers, speaking to Daybreak Europe anchor Manus Cranny a little bit earlier on this morning. Let's take a deeper dive into the bank earnings season. Joining us now is Jonathan Tice, Senior Analyst for European Banks for Bloomberg Intelligence. Jonathan, UBS then results are a comfortable beat, but the stock is down. This is all about, is it the Archegos surprise?
Yes, good morning. That definitely has something to do with it. I think as well, some reasonably mixed results in the investment bank as well. So a decent headline beat, very similar to HSBC, but as ever, the devil's in the detail. And as you say, the Archegos debacle costing a few $100 million more than analysts had penciled in. Manus' question was quite right. Why wasn't it flagged more clearly?
Yes, and yeah, so interesting to get the response then from the CEO on that subject. Moving on to HSBC, a beat for HSBC. What were the key drivers then? We had cautious optimism being expressed by management. What were the key drivers and takeaways?
Well, I mean, I'm a bit disappointed, to be honest. The revenue, non-interest income is decent. Interest income's in line, but costs, they're flagging that they need flexibility to sort of pay variable comp. Costs were a big miss. And if they struggle with revenue later in the year, they're going to have to do a lot more on costs. So, yes, things are turning around, net interest margins are stabilising. But the one lever that management absolutely have, because the big beat is credit loss, which they'd over-provided for last year, is costs. And frankly, they don't really seem to be doing quite enough. So I think a very muted reaction on the share price because the market will be scratching its head slightly and wondering why they're not being more aggressive there and flagging, well, actually, we do need a bit of leeway as well to pay our staff.
Interesting insight. Thanks very much, Jonathan, for bringing us that story. Yeah, it's interesting on the credit losses that have been provided for, how a number of banks in the sector are managing to write some of those back. Jonathan, thank you. Jonathan Tice, Senior Analyst for European Banks at Bloomberg Intelligence. Coming up on the programme, we'll be back to one of our top stories. We've been covering it all this week. India continues to see record numbers of infections as its second wave of coronavirus spirals out of control. An update next. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
The situation in India is beyond heartbreaking. WHO is doing everything we can, providing critical equipment and supplies.
We are working nonstop across the government to do all we can to deliver on an urgent basis the supplies most needed within India.
And if the virus, finds a way in India or another country to infect people or to evade the vaccine, then everybody on the planet is at risk from that.
Vaccine nationalism and inequity doesn't work. I would urge those countries that are not sharing or exporting to do so, as quickly as possible.
This is not about shots in arms in return for political favors, in return for any sort of transactionalism. This is about America's humanitarian leadership.
Some of the official voices from around the world calling for action as India's coronavirus crisis continues to deepen and expressing support and explaining the things that can be done globally. The country has reported more than 323,000 new cases in the last 24 hours. Meanwhile, US President Joe Biden is pledging additional support following a call with Prime Minister Narendra Modi. The president has promised to send hospital equipment and vaccine materials to India. Joining us now from Mumbai is Bloomberg's Global Business Asia editor, Bhuma Shrivastava. Thanks very much, Bhuma, for joining us. So there's still many reports about supply shortages from oxygen to vaccines. What's the situation like on the ground now?
Situation is pretty much the same as it was in the past few days. There is a hope it will get better with a lot of international aid pouring in, but India still reported more than 300,000 cases today, which is the sixth day in a row. The deaths were about 3,000, a little under, but there's no major let up there. So we don't see it becoming better right away, but it should start improving, hopefully, as India starts vaccinating more of its citizens from May 1. Everyone above the age of 18 is eligible, and as more supplies start coming in.
Right, and we've got these pledges of international support. What does that mean then, Bhuma, for India? Does it touch the sides, what is being offered by the international community?
Not really, but it's better than nothing. So after weeks of dragging its feet and a lot of requests from Indian drug makers' side for releasing of raw materials, we finally saw some action over the weekend with the U.S. government deciding to send away its stockpile of AstraZeneca vaccines. There's word of a financial aid package from U.S. to India and releasing of raw materials that Indian vaccine makers require for manufacturing locally. Those were the positive developments. There's also help coming in from European countries like UK, France, Germany have all pledged support. The only thing is the US statements are a bit lacking on details. Like we don't know of the entire stockpile that US has, how much will come to India, the raw materials that will be released, what quantity and when. So those are the details which we're waiting for.
And what impact is the COVID crisis having on the leadership of Narendra Modi? We know that there are certain regional election processes in train at this point, Bhuma.
I think it's fair to say that this is an unprecedented leadership crisis for Modi in India. There have been crises in the past, but nothing of this magnitude. In the past, he's also a survivor. He's managed to deflect blame a lot of times on other factors, on state governments, etc., when things haven't gone right. But this is something of a whole new scale. We will see how he tackles that kind of opposition and resentment at the common man level, but also regional elections, as rightly mentioned. The results of that will start pouring in early next month. That will be the real test of how much of the public anger gets directed at him.
Boomer, thanks very much. Thanks for the update. Bloomberg's Global Business Asia editor, Boomer Srivastava, joining us there with the latest on that situation in India. Coming up here on the program, we will talk about what's going on in commodity markets, because despite the ongoing fight against coronavirus in India, elsewhere we are seeing economic recovery in some countries, and that is driving higher demand for certain commodities. A record run, in fact. Copper jumps to 2011 highs. We discuss the commodities' stunning rally with the Market Live team's Laura Cooper. That's next. This is Bloomberg.
Markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We're now in the early stages of a sustainability revolution.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Companies that have strong stakeholder capitalism as a part of their principles, those companies are performing better than the ones who are silent.
Some of the top executives, policymakers and investors speaking at the Bloomberg Green Summit, taking place a little earlier on this week. Let's get a market perspective now. Laura Cooper, Bloomberg's Markets Live macro strategist here in London, joins us now as ever. Laura, very good to speak to you. So you'd be forgiven if you look at the overall moves in markets for thinking that there's not much going on, wouldn't you, Laura? I mean, the stock 600 is going exactly nowhere this morning. And yet when you dive into the individual corporates, the earnings stories, there's some really fascinating developments out there. How do you reflect on the earnings stories we've heard?
Well, and that really does appear to be that key narrative for markets, is despite really seeing quite stellar earnings beats across Europe and across the US, the market reaction has been fairly muted. So we have about a quarter of that stock 600 already reporting. And just looking at financials, we've seen an earnings surprise of about 10%. And yet price action, the stocks have barely moved on a one-day basis. So I think this does tell us that much good news is priced in. Sentiment is quite stretched. Positioning is bullish. So yes, healthy earnings are needed to sustain equity gauges higher. It's hard to see really what that catalyst is to propel them much further, given what we're seeing right now.
We had some interesting conversations with guests this morning on the subject of inflation, Laura. Lots of guests talking about inflation looming. It's just a question of how long it lasts, how high it gets as it approaches. And interesting, one of our guests this morning talking about how a lot of his conversations were around pricing power with various companies. And we're seeing a lot of other signals around inflation as well coming through from commodities markets this morning.
Yeah, and that really is the key question facing market watchers right now. We know that we're going to see these near-term price pressures. We're already seeing that feed through in terms of the commodity complex. So copper is at 2011 highs. We are seeing Brent oil was briefly above $66 a barrel. The Bloomberg Commodity Price Index is on pace for its strongest month since 2016. So all of these are pointing towards that near-term inflationary burst. And the question is whether that will be sustained. But I think something quite interesting is what we're seeing come out of earnings reports. So Tesla yesterday did warn of chip shortages potentially disrupting their business. That could feed into price pressures. And I think the question now is, can that actually feed through into those consumer prices? Tends to be a little bit stickier. The Fed tends to look at just core measures, but I think really a key focus to watch going forward.
Yeah, the best month for the Bloomberg Commodity Index, it seems as if we're approaching that at least since 2016. Just briefly, Laura, concerns around the recovery fund and its delivery kind of fading into the background here in Europe. We've heard from Italy, we're going to hear from France and Germany as well.
Yeah, and that's really quite interesting. If anything, I would expect that this ambitious plan by Mario Draghi is likely to provide some near-term uplift to those Italian equities. It's because we are seeing, you know, the bid towards green energy, towards digital, which should actually feed through into utilities, which is about 1/5 of the FTSE MIB. It's deeply discounted relative to its European peers. I think over the longer term, the question is, will debt challenges come back to the surface? We know Italy's debt to GDP ratio is at a record. So really, I think near-term positive, but let's see how it plays out.
Okay, thanks very much, Laura. Good to speak to you. Laura Cooper, Bloomberg Markets Live macro strategist here in London. That is it for the European Market Open. Surveillance Early Edition will be up next. I'm off to Bloomberg Radio. European equity markets not moving all that far in aggregate. Some fascinating earnings stories to continue coverage of. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We are at the same time an exporter of energy, a producer of energy, and that is a challenge that not all other countries have.
We have too much pressure on public companies, and we don't ask the rest of society moving on.
We're reviewing the different prime brokers relationships as well as the GFO, the family office relationships.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the early edition on this Tuesday, the 27th of April. I'm Francine Lacqua in London, and here's what's coming up on today's program. UBS takes a surprise $750 million hit from the Archegos meltdown, sending shares lower despite solid underlying results. Our interview with the chief executive, Rolf Hammers, coming up next. HSBC profits rise on a positive outlook for the global lender. The CFO, Ewan Stevenson, tells Bloomberg he's cautiously optimistic about the future. And record profit at Tesla is met with a shrug by investors as shares fall in overnight trading. Even a $101 million gain on Bitcoin is not enough to spur enthusiasm. So let's get straight to our top story on UBS taking a surprise hit from the Archegos meltdown. The collapse of Bill Huang's family office has cost the Swiss bank some $774 million. Now, the blow comes as the lender reports a first quarter profit of $1.8 billion that exceeds analyst expectations. The UBS chief executive, Rolf Hammers, has told Bloomberg that the bank plans to review its risk management.
We're very disappointed at the situation. We're taking it very seriously. We're reviewing the different prime brokers relationships as well as the GFO, the family office relationships, reviewing the risk management processes as well in order to get the lessons learned out and make sure it doesn't happen again.
Will you reduce leverage and reassess how you lend to the prime brokerage or to the family offices?
Well, I think if you take the lessons learned up to now, there is certainly two elements that we are picking up. So the first one is the level of transparency in some of this business, as well as the concentrated positions that were built up vis-a-vis the leverage, I guess. So it's a combination of those that we have to take into account going forward.
Will you demand greater transparency from those family offices going forward?
Absolutely, absolutely. That's the big lesson learned here. It's not only that we should demand it, and all banks should demand that. It's also that we should look at regulations to come in here in order to ensure that an idiosyncratic event like this doesn't happen again.
Will you cut leverage to the hedge fund business and the investment bank?
Not necessarily. I do think you have to be very selective and very prudent around that. We have strong client relationships. We have a strong business here. The prime brokerage business itself is strategic to us. The capabilities.
You're still fully committed to PB?
Absolutely. The capabilities underlying prime brokerage business are important to build up your wealth business going forward, and therefore we're committed to it strategically. But again, we have to take the lessons learned and make sure that we do it good for going forward.
Rolf, $774 million is $750 million. You're going to do a conference call. Why did you not disclose this number sooner?
Well, you're referring to a gross number. The net number is 434. In view of the very strong first quarter results, we felt it was not required at the time.
You're also mentioning the buyback. When can we expect buybacks to restart?
Well, we announced the share buyback as a program until the end of 24 in the size of 4 billion Swiss francs. We have performed on that in the first quarter, and we will continue going forward, and we will be in the market this week.
You're looking at risk more than ever before. Are you worried about quoted equity markets? Are you worried about any frothiness in these markets?
Well, it's clear that if you look at some of these peaks that we see in the markets or in specific share prices, I think we are getting close to the peak of things. Some areas are still attractive. Some areas are getting close to a bubble. Some are too leveraged. So you've got to be really careful now as to how you go
Where do you think
further.
the bubbles are, Rolf?
I think there is certainly bubbles in some asset classes. And if we see asset classes that need a bit of leverage or need cheap financing, so across the globe, I'm sure there is areas in real estate where there is bubbles.
Well, that takes me very nicely. You know, you're settling in to floor 3, I believe. Very nice floor. When do you expect the majority of your staff to be back in the offices around the world?
Well, expect is something else than hope. And the majority, I would hope, certainly into the 3rd or 4th quarter.
Well, that was our Manus Cranny speaking to the UBS Chief Executive, Ralph Hammers. Manus will join us a little bit later in this program. Now let's get to our other top story, our market story, of course, with Danny Berger. UBS and HSBC both reporting today. Overall, Danny, what's the market reaction been like?
Well, I mean, look, you can definitely see what Manus started out there talking to Ralph Hammers about, and that's the Archegos story. What a difference in share price we're getting between HSBC and UBS. And look, I want to say both of them did have solid results this quarter. HSBC more than doubling their earnings, both of them having very good results when it comes to wealth management. HSBC, a great result when it comes to their Asian business. But look, 1.4% up, 1.8% down for UBS. I mean, you have to wonder, Francine, if they had started to give details about Archegos earlier, if they'd done it last month when we heard other banks did it, could they have avoided today's fall? Could we have been concentrated on the other numbers that they had given out? Of course, that's not what ended up happening. So I really think that that is what's going to capture the market's attention today when it comes to bank earnings.
So on Archegos, did UBS actually give any details on how it might change its strategy to avoid another blow up like this? I know we heard Manus really trying to push him on this.
And I think what he told Manus is really the majority of what we're going to get. The fact that they're looking at more transparency from their family office and hedge fund clients, because we have to remember, UBS is really seen as the gatekeeper, the overseer of billionaire dollars. Their wealth management business for high net worth individuals is so important to them. In fact, in their earnings report, they talked about how loan growth was going much higher when it came to wealth management. So they're now extending more loans to billionaires. I was talking to our Patrick Winters about this from Bloomberg News, and he was telling me how this is really a strategic decision from UBS to go after that. Of course, the trick here, Francine, is picking the right billionaires. Bill Huang, perhaps, is an example of the wrong billionaire.
Yeah, Danny, thanks so much. Danny Berger there with some of the risk management surrounding some of these big banks. Now joining us is David Riley, Blue Bay Asset Management Chief Investment Strategist. David, thank you so much for joining us. I know you don't want to talk about individual stocks, but how can we be so sure that there are no Archegos type situations out there, and what does it mean for whether you want to be exposed to some of these European banks?
Well, I think it speaks to the whole debate around the level of transparency and reporting about things like leverage, whether that be in, family offices or in other parts of the market. So, there's always that sort of event risk to some extent with exposure to banks. But I think, the European banks, they still have a more difficult operating environment relative to that of their US counterparts. They have a much flatter yield curve, negative rates, and the European economy is recovering less rapidly. But I think that from a fundamental perspective, and certainly from a credit perspective, I still think there is actually quite a lot of value still to be had in having exposure to European banks. If you look at credit spreads on some of those bank debt, they're still actually above their sort of pre-pandemic tights, which, to be frank, is not true, generally speaking, of other segments of the credit market.
Hello, ladies and gentlemen. I'm going to place an order to sell short British pound. The price I am looking to sell, 138.74. 874. Okay, 138,874. So if you look into trade today, and if you're looking to trade British pound, here is your chance. We can sell and we can British pound, and we can make profit from this pair. Okay, so you still have time. It moved down. Hopefully it will go up and we will get filled. So stay with me. If you want to follow this trade, you have to place the order that will be filled. Okay, I'll speak to you later.
Is in terms of the shape of the yield curve. If you look at European bank stocks, they track quite closely the shape of the European yield curve. So I think as we come out of COVID-related restrictions, as vaccines are rolled out, if we get a steeper yield curve in Europe, then I actually think European bank stocks will also perform quite well. But from a creditor point of view, I think there's still quite a lot of value to be had in European banks.
David, thanks so much. David Riley there from Blue Bay Asset Management stays with us. Now, GameStop also rising in pre-market. There was a big stock sale that we brought to you yesterday, and of course we'll keep on looking at GameStop. I mean, this is probably the story of 2021, exactly how much it will raise. And we had this great story also on the chief executive, the departure actually of the chief executive back in July, and then the new person in charge, and again, what that means going forward for the stock that was largely forgotten before the Reddit users came in. Now, coming up, HSBC gains following a bumper quarter that saw a bounce back in European and U.S. profits. We'll hear from our interview with the Chief Financial Officer next and discuss earnings season. This is Bloomberg.
Guys, it moved down, as you can see, and we have to cancel this order and wait for another time. Let's see if it will move up right now. If this candle, no, see, as you can see, it keeps moving down. Let's cancel this order and let's wait for another pair or another chance to trade British pound, but not right now because it changed its direction. I'll speak to you later and stay safe.
Last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US said it will share its entire supply of the AstraZeneca vaccine with other countries, about 60 million doses. It is also preparing an aid package for India, which is facing the world's largest surge in COVID infections. The announcement reflects growing pressure on the US to do more to help other countries jumpstart their vaccination campaigns. Crossing over to Italy, Prime Minister Mario Draghi is laying out a €260 billion plan to redesign the economy. The spending is about 15% of Italy's GDP. The money will be mostly drawn from EU recovery funds, and about 40% of it will go into green projects. The proposal needs to be sent to Brussels by the April the 30th deadline. And Hong Kong homeowners may sell as much as $19 million worth of property as residents immigrate here to the UK. A Bloomberg intelligence report says 13,000 to 16,000 households may move to Britain this year. That's about 1% of households living in private-owned homes. Property listings at the city's largest real estate agency have surged 44% from last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, earnings season getting into full swing. We've already had a number of banking heavyweights reporting this morning. One of those, HSBC, with the lender's earnings more than doubling in the first quarter, with a return to profit in Europe and the U.S. catalyzing the bumper results. Now, the Chief Financial Officer, Ewan Stevenson, told us that he hoped the bounce back would continue.
When you look at our core lending platforms, mortgages have continued to remain robust in places like Hong Kong and the UK. And we're also seeing a really strong recovery now coming through in the pipeline and commercial. So pleased with the results and cautiously optimistic on the rest of the year.
Now, we're also expecting a slew of numbers from the tech giants all this week, with Google parent Alphabet and Microsoft out today. Well, David Riley of Blue Bay Asset Management is still with us. David, we're talking about some of the possible bond exposure, corporate bond exposure to some of the banks. Overall, when you look at the industry groups, in Europe but also across the world, where do you see the biggest value?
Yeah, I still think there is some value to be had in sort of the cyclical sectors. And we've actually sort of seen a bit of a kind of pause, if you like, in terms of the performance of those sectors over the last sort of few weeks. A little bit of a kind of loss of momentum around the sort of reopening, sort of reflation theme. But I still, as I say, think there's some value there. That would be banks, as we've been discussing. I think also in terms of some of the sort of COVID impacted sectors within Europe, also sort of some of the sort of industrials, consumer discretionary sectors as well. And then looking sort of, more broadly, after what was a pretty difficult first quarter, I actually do think, and still obviously big issues associated with COVID, sadly, I actually do think there's some value to be had across emerging markets as well. So, I do think you have to kind of look globally, but I still think that some of the sort of cyclical, the sort of deep value and emerging markets are offering some value right now.
David, where do you see, again, amongst that space, so emerging markets, is there any specific space? Do you look at industry groups or do you actually look at country level?
Well, typically it tends to be more in terms of the individual names and the sort of country risk which or the countries in which they're sort of based in. So, we do think that, with the sort of dollar sort of stabilized, with volatility in US rates markets has stabilized or actually declined. Treasury yields are pretty well behaved at the moment. We're not expecting really much news to come out of the Fed to change that. Then I think it actually does create some opportunities across parts of emerging markets, whether that be, in South Africa or Indonesia, Mexico, Brazil as well. So there are some opportunities out there, I think, for investors interested in what I think are relatively attractive valuations, both in credit and in broader sort of emerging market fixed income.
David, we have a number of, I don't know whether it's black swans or things that we worry about. It could be inflation, crypto collapse. It could be a number of other things. It could be something like Archegos. What do you worry about the most for the next 6 months, especially for Europe?
Well, what I worry about for Europe is that we don't get a reopening, and the sort of summer season. I mean, you've been reporting about the, ambitious plans that the Italian government has to deploy the EU recovery funds. And, I think more generally for Europe in particular over the next 6 months, it's going to be key is continuing to accelerate the rollout of vaccines and allowing a meaningful relaxation of social distancing restrictions so that we can have a reopening across Europe as a whole and Southern Europe in particular, because tourism does matter. It's a significant part of the economy. It's also a very significant provider of jobs as well. So I am kind of fearful that either there's setbacks in terms of vaccine distribution. I mean, heaven forbid that there would be a spread of a new variant that proved to be more vaccine resistant. And I think these are sort of tail risks, but it is something which over the next 6 months, I think is probably the sort of single biggest concern in terms of the European outlook.
David, thanks so much. David Riley there, Blue Bay Asset Management Chief Investment Strategist. Now, coming up, Tesla posts record profits and even a $101 million gain from its Bitcoin investment. Investors, though unenthused by the numbers, will break down the automaker earnings next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Wednesday, the Fed decides. The Fed is on hold waiting on inflation. But for how long? Coverage begins 2 p.m. on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, Tesla earned a record profit in the first quarter, yet shares are sliding as much as 2.5% this morning in pre-market trading. Let's get more with our Danny Berger. Danny, why did Tesla actually fail to ignite investor excitement?
Francine, as one investor put it to us, everything that everyone had expected to happen happened. And I think that's kind of the problem when you come into, as many companies have faced high expectations for this earnings season. Tesla had already given the market their very strong delivery numbers for the first quarter. So they did have a good earnings, by all accounts, beating estimates. The sales were strong. You even had $101 million on the bottom line thanks to the sale of Bitcoin, which was about 10% of what they hold, and a record amount of regulatory credit sold, over $500 million. But still, we see this picture pre-market, as you say, a more than 2.5% decline, because although Elon Musk said that demand was really strong, without any concrete numbers, investors just shrugged.
Yeah, so what is Musk's strategy when it comes to Bitcoin? I mean, he already made $101 million.
Yeah, exactly. So to some degree, this is paying off. Of course, it's not really a core part of what you'd imagine an EV strategy to be. Now, they did talk about it on the earnings call, but in sort of the style of Musk, I thought it would be better to bring up a tweet. So this tweet was in response to the Barstool president's tweet asking Elon Musk if this was essentially a quote, pump and dump of Bitcoin. And he says, look, Tesla sold 10% of its holdings essentially to prove the liquidity of Bitcoin as an alternative to holding cash on balance sheet. This itself was able to give Bitcoin a bit of a bump. It's higher so far this morning, about 3%. But this idea of Bitcoin as a liquid asset, as an alternative to some of the more lower yielding assets, Francine, it's one I'm sure the market is going to question, considering the fact that the very appeal of Bitcoin tends to be its scarcity. And at the same time, we have these Bitcoin whales who own most of the liquidity. So Bitcoin as a liquid asset, definitely an interesting idea.
Danny, thanks so much. Danny Berger there with the very latest on Tesla. Now coming up, Canada pledges to meet its climate goal to cut emissions in half by 2030, but how does it stack up against other developed market peers? My interview with the Prime Minister, Justin Trudeau, is next. This is Bloomberg.
Right now, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
President Joe Biden, nearing 100 days in office, addresses a joint session of Congress. COVID, the economy, the plan forward. Wednesday, 8:30 p.m. on a special edition of Balance of Power on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
UBS takes a surprise $750 million hit from the Archegos meltdown, sending shares lower despite solid underlying results. We're live in Zurich coming up. HSBC profits rise on a positive outlook for the global lender. The chief financial officer, Ewan Stevenson, tells Bloomberg he's cautiously optimistic about the future. And record profit at Tesla is met with a shrug by investors as shares fall in overnight trading. Even a $101 million gain on Bitcoin isn't enough to spur enthusiasm. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 27th of April. Now, let's turn the conversation around climate change. And the Prime Minister, Justin Trudeau, is vowing Canada will meet its new target to reduce emissions between 40 to 45% of 2005 levels by 2030, despite the country's mixed record of reaching previous climate goals. Now, Trudeau added that Biden's arrival to the White House means more cross-border cooperation on fighting climate change across all areas of the economy. Well, I spoke earlier with the Canadian Prime Minister as part of the Bloomberg Green Summit.
This year, with the COP conference, with the Americans stepping up after a few years of absence on climate leadership, it's a great time to see the kind of momentum we're all building.
Prime Minister, you've increased your targets, but you're still quite a long way off from the UK or the EU, for example. Can Canada actually do even better than the targets?
Well, I think it's really important to, first of all, understand that everyone's in different circumstances. We have already done, over the past 5 years, a tremendous amount of work on moving forward to reach our existing targets. So it's not just about putting targets, it's about having a plan for them. We had an old target of 30%. We built a plan that got to 31%. Then we moved the plan to 36%. And now we're talking about a target of 40 to 45%. So we know that, for example, phasing out coal and coal generation is one of the things that the Americans are going to be doing. We've already done that. That's already built into our plan. So as we get more and more aggressive, we have to rely on things that we're doing that other people aren't yet doing.
Prime Minister, a lot of people, especially climate watchers, are disappointed at some of the efforts that Canada has put in place. Now, we'll talk about your new targets, but even if you focus on those, you targeted 40 to 45% reduction. That's relative to 2005, which really flatters your efforts. If measured against the 1990 benchmark using Kyoto Protocol, then the reduction would be much lower. What do you say to the critics that think Canada is greenwashing?
Oh, everyone needs to continue to do more, but I think the fact that we have one of the realest prices on pollution of all our peer countries, that we are at the same time an exporter of energy, a producer of energy, and that is a challenge that not all other countries have. And we need to make sure that while the world continues to run on oil for the foreseeable future, we're doing a better job than anyone else in decarbonizing, in transforming our energy mix, and investing in things from hydrogen to CCUS to ensuring that there are the innovative good jobs for so many Canadians who work in the energy industry, who know the world is changing, but also who know that they can be part of this extraordinary opportunity. So yeah, I think it's something that I've been a little bit frustrated about from time to time, that people are not understanding just how much Canada has done. And I'm not saying we're done. We have a lot more to do. And we have continually not just put forward targets, but put forward a level of detail in our plans that few other countries have matched to this point.
Prime Minister, the expansion of Canada's oil sands, of course, has long been one of the stumbling blocks to reducing its emissions. So how and where do you see that industry heading by 2030 or 2050?
Well, I think, first of all, the industry itself has recognized that the world is transforming its energy mix. People, investors are looking at greener investments. People are looking for technologies to decarbonize. That's very much something that the oil sector in Canada has been engaged in over the past many years. We've accelerated it significantly to look at how to reduce the carbon emissions associated with energy production. But I will remind you that it's not just about the oil sands themselves. It's also about consumption. It's making sure that Canadians are consuming less fossil fuels. We're going hard towards zero-emission vehicles. We're investing in retrofits. We're making sure that people have better public transit. Those kinds of investments reduce our fuel consumption, but so too must the world. And that's the opportunity. As long as the world is still dependent on oil, there will be a business case for continuing to look for more reliable sources.
Justin Trudeau there, the Prime Minister of Canada, speaking to me as part of this week's Bloomberg Green Summit. You can register and watch the full conference online at Bloomberg.com. Now, Norsk Hydro is considering selling shares in its new hydrogen venture. The aluminium maker, one of the largest globally, is currently developing 3 to 5 projects in Norway and the rest of Europe. It plans to raise capital in the short to medium term. Now, the company's stock price rose in Oslo following a strong set of first quarter results before declining as much as 3%. Well, joining us now for an exclusive conversation is Hilde Merete Asham, Norsk Hydro Chief Executive Officer. Thank you so much for joining us. As always, when you look at some of the concerns surrounding hydrogen and surrounding some of the renewables that we're looking at, how much is pricing an issue, and how much will pricing actually dictate when and how we use this?
Well, we believe that hydrogen is a very important part of the energy mix going forward towards 2050. And we see that we have opportunities in this value chain, both because we can provide renewable energy to produce hydrogen, as well as we are a big gas consumer today, where we see that we can replace hydrogen, then we can reduce our CO2 footprint.
So if you look at some of the hydrogen plants, are you able to keep production costs under control, and should we expect margins to fall from these elevated levels?
We will start with a couple of projects within our own sort of turf at some of our plants, and then by doing that, we see that we will pilot, and we believe that cost will come down so that we can develop this as a profitable business.
So what will Norsk Hydro look like actually in 4 or 5 years? You talk about some opportunities like customer-driven opportunities. You talk about commercial ambitions. How different will the company look like in half a decade?
Well, we have recently announced a strategy which is based on 2 pillars. One is low carbon aluminium, and the other is based on growing in renewable energy, in wind and solar, in hydrogen, in batteries. And that's a fine balance, because it's built on our capabilities towards these mega trends that we see. The world needs more low carbon aluminium, and the world needs more renewable energy. And that mix, I believe, will be Hydro the next 5 years.
Where exactly do you see hydrogen? So could it be a spin-off, or listing at a separate company, or would it look like a deal with someone else?
We have recently organized this as a separate business, and we are planning to list this company. We need partners into the development of this project, but we will be in the majority.
So you're talking about low carbon aluminium. What kind of premium, what kind of cost does that bring? And are you expecting that to go up and then down, or is the trend downwards?
Well, we see more and more traction for our low carbon brands, and we have a good position today where we have low CO2 in the production of our products. We see that we need to market this towards segments that really appreciate the low carbon, like, for example, in the building system industry. But we see more and more traction. The people are more and more focused on not only what is produced, but how it is produced. So we do see premiums in some particular market segment today, but we foresee that these products will get more traction as we go.
What's demand looking like from China for some of your aluminium products?
Pardon, I didn't hear what you said.
I was going to ask about China and actually how demand looked like in China.
Well, the global demand is very good at the moment. But we see that with the demand growth, we see that the market is quite tight when it comes to supply. And when you ask about China, we also see that we see restriction on capacity due to environmental aspects. So the demand is good. The supply-demand balance is tight. And that is also what we see in reflecting the LME prices these days.
Do you worry that going forward, China will actually pull back on some of the stimulus to keep debt under control, and that would hit aluminium demand and therefore prices?
I think China, we need to focus on China in the sense of how China produce their aluminium metal, and there might be restrictions on capacity when it comes to high carbon content, and we are following China closely on that aspect.
Thank you so much for joining us. Hilde Merete Eschem there, the Norsk Hydro Chief Executive Officer. Now coming up, UBS reports a surprise Archegos hit despite better than expected profits. Up next, we're live in Zurich. This is Bloomberg.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Oil major BP is promising to begin share buybacks in the second quarter. Hopes the payouts can help win over investors after a difficult year for the oil industry. The firm will repurchase $500 million of shares over the next 3 months, with plans to return about 60% of its surplus cash flow to shareholders. Now, Tesla's record profit has failed to impress investors. Shares are lower in extended trading, despite sidestepping the industry's chip shortage and making $100 million from selling some of its Bitcoin. It is a sign of lofty expectations for the e-car maker, which saw an 8-fold gain in its stock last year. And shipping containers are toppling overboard at an alarming rate. The industry is seeing the biggest spike in lost containers in 7 years. More than 3,000 boxes dropped into the sea last year. This year, it's already over 1,000. Pressure to speed up deliveries is raising reducing the risk of safety errors and disrupting supply chains for hundreds of firms. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Liana. Now, UBS takes a surprise hit from the Archegos meltdown. The collapse of Bill Hwang's family office has cost the Swiss bank some $774 million. Now, the blow comes as the lender reports a first quarter profit of $1.8 billion, exceeding analyst expectations. While UBS Chief Executive Ralph Hammers told my colleague, Manus Krani, that the bank plans to review its risk management.
It's not only that we should demand it, and all banks should demand that, it's also that we should look at regulations to come in here in order to ensure that an idiosyncratic event like this doesn't happen again.
Well, joining us from Zurich is my colleague, Manus Krani. Manus, first of all, great interview. It's one of the first times that we actually really heard from the new chief executive. Why didn't UBS disclose the hit earlier?
There's a very important word in this interview. I encourage everybody to go back and listen to it. The word is required. I was not required to divulge this number any sooner, whereas the CEO, Gutstein, that you spoke to, and Nomura, along with a number of others, there was a material impact to the numbers, and hence they had to come to the market. Now, Hammers did not elaborate much further on that, but he really was very exacting. This is a matter of fact. This is what I was required to do, and I was not required to come any earlier. I think, Francine, this is a story. Globally, $10 billion is the pain from Archegos, a name that will be etched across this cadre of CEOs globally. The question is, do you know your client? What do you know about your counterparties? Do we need more disclosure? And the answer from Hammers is very clear. Yes, there will be more requirement for disclosure, and that is going to be a global phenomenon. Francine, I go back to when I actually worked with billionaires. I put it to you, Ms. Lacroix, that when I had clients, I asked them, and who else do you have a line into? Who else do you have leverage to? There is no legal requirement, but good governance is ask a question.
I guess, you know, Manus, I guess the concern, and I hear this, not a lot of people will tell you on the record, but actually the concern is that as a European bank, you don't have the firepower as a US bank. So maybe you're pushed to take on more risk to try and make more money because you're kind of left with some of the stuff that Wall Street won't touch. Is that fair?
Look, I think it's a portion of the argument. Undoubtedly, Wall Street, the top five, absolutely ripped it off in markets, FICC. This is a bank which Ermati took apart. Ralph Hammers takes it over. It's an equities-driven business. The markets business, Francine, in the investment bank, was under a little bit of pressure. I think there is a part of an argument that you've got to go after leverage, you've got to go after the family offices, and you've got to be cheeky with the lines that you give. But Archegos has now taught the banking industry, you overstretch, you over-leverage, and if you don't know your clients well enough, you will pay a heady price. It sounds like they're in the process of getting to grips with leverage, but he's not going to wholesale de-leverage this bank or the wealth management or the investment bank. That was a very clear message from the discussion.
So, Manus, what exactly will we see at the bank? Like, are we expecting more, you know, on the Archegos fallout, regulators are also looking into it. What does it mean for UBS, Credit Suisse, and the like?
Look, it's going to mean perhaps a new regime of disclosure from the wealth managers, the relationship managers. Don't you just love Bahnhofstrasse? Shall we just let that magnificence of the tram pass? There we go. It's going to mean more questions. It's going to mean more disclosure and a new regime. It'll be interesting to see what FINMA and the other regulators, do they come together in a unified way to make better requirements and disclosure, Francine. But I think there's a wind of change. Hammer's also very clear about his purpose. We've heard JP Morgan talk about lending to ESG and to the green economy. Ralph Hammers has a new purpose. I get a feeling this is a CEO. We're going to see a little bit of a regime shift in how and where they do business. Francine.
Manus, thank you so much. Zurich has never looked so beautiful, especially when, you know, no one's been there and we haven't been able to see in the sun for the last 6 months. Manus Krani there, back on the road in Zurich for us. Now, coming up, countries from the US to Australia send aid to India as it combats the world's largest surge in COVID-19 cases. We get the latest shortly. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The situation in India is beyond heartbreaking. WHO is doing everything we can, providing critical equipment and supplies.
We are working nonstop across the government to do all we can to deliver on an urgent basis the supplies most needed within India.
And if the virus, finds a way in India or another country to infect people or to evade the vaccine, then everybody on the planet is at risk from that.
Vaccine nationalism and inequity doesn't work. I would urge those countries that are not sharing or exporting to do so, as quickly as possible.
This is not about shots in arms in return for political favors, in return for any sort of transactionalism. This is about America's humanitarian leadership.
Well, that was a global reaction to the worsening coronavirus crisis in India. Now, countries from the U.S. to Australia are sending aid to India as it combats the world's largest surge in COVID-19 cases. New infections topped 300,000 for a sixth day. The U.S. said it would send up to 60 million doses of AstraZeneca's coronavirus vaccine abroad as it faces pressure to share its supply. Meanwhile, Biden plans to announce a new guidance on wearing masks outdoors for vaccinated people. So let's get more on all of this from Bloomberg Intelligence's Sam Fazeli, who's of course a specialist on virology and COVID-19. Sam, first of all, what at the moment, if you see the situation in India, and it's heartbreaking to see all of those pictures and the recounts of people really looking for hospital beds or oxygen masks, but what exactly it should be the right way of dealing with it now? Is it a national lockdown, or is it, trying to vaccinate as many people as possible?
Yeah, good morning, Francine. Obviously, vaccination is the ultimate way of managing this pandemic. You can't keep people locked down forever. But as Portugal shows, it's a perfect example. Even without vaccines, social distancing and lockdowns, when you are in trouble, can make a huge difference. It's incredible when you look at the data out of Portugal. So it's a lesson for everybody to realize that, especially when you're trying to vaccinate against the backdrop of a roaring infection rate, the ideal would be to lock down, which is what the UK did, what Portugal's done, and I think other countries should, certainly India should think about that. Whether that's feasible or possible is a different question.
But Sam, if you're trying to vaccinate just when cases are roaring, do you risk doing more variants or mutants?
Well, there is a possibility of that, although I have to say that more and more you read about it and more you think about it, the probability of the vaccine, just as you're vaccinating, inducing pushing the virus to mutate is not that high. But what you don't want to have is even that very low probability especially when cases are this high. So that's the most important part here. But you just want to avoid people going through this process, because when the healthcare system is under pressure, other people suffer too with any other diseases.
Sam, when you look at some of the possible change in guidelines, which would be quite significant from the CDC in the US, do we know at this point in time, given how many people have been vaccinated, whether it's okay to not wear a mask outdoors?
Well, I mean, Israel removed its mask mandate only very recently, last week. And they had been at much higher level of vaccinations than the US is. On the other hand, we are in a situation where I think there's a lot of pressure to move in that direction. Summer is coming, which means the probability of the virus surviving in the more humid air around us lower. So I wouldn't be surprised if that comes with a week or two to go, or maybe they even put a target on it. Once you've hit X% vaccination rates, you can remove that mandate. We'll have to see.
All right, Sam, thank you so much for joining us there. Bloomberg Intelligence's Sam Fazeli. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kelly Lyons joins me out of New York. We'll, of course, have a full roundup of the market stories. We'll look at HSBC. We'll look at UBS. Both banks beating estimates, but then UBS coming up with this Archegos hit that no one was really expecting. So we'll look at that. We'll look at GameStop. A couple of other things, of course, bubbling under the surface is what exactly we're seeing in the UK with Boris Johnson once again being accused of alleged sleaze. So we'll look at that. We'll have a full roundup of foreign policy. This is Bloomberg.
One of the interesting features about this illness is that if you look at it, the people who develop these long-haul symptoms are often not the individuals who are hospitalized and were sick and on a ventilator and stuff like that. These are individuals who actually, most often, they never went to the hospital. They had a relatively mild illness in the acute phase, and they recovered from it. If you were in the hospital, it means you probably mounted a very strong immune response, okay? And you recovered from the illness, you probably got rid of the virus. If you never mount a strong enough immune response, then what happens is you may have mild symptoms. You thought, oh, you know, I escaped this. But in reality, you never got rid of the virus. So you get this chronic immune activation that persists in these individuals. But it's never good enough to get rid of it because they never got rid of it in the first place. But it's enough to start causing collateral damage. And what the virus does is it inhibits certain types of immune responses. It's a drain on society at every single level. I mean, it affects women more than men. It affects people in their average age is 40. That's the most productive years of your life. And so you can see that the impact, worldwide impact of this is unbelievable. Economic toll, the psychological toll, every aspect of society is going to touch.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
We are at the same time an exporter of energy, a producer of energy, and that is a challenge that not all other countries have.
We have too much pressure on public companies, and we don't ask the rest of society moving on.
You get what you incent. So seeing those incentives aligned to the outcomes that companies say are mission critical to their future is a very, very good thing.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning from London, Berlin, and New York on this Tuesday, April 27th. Our top stories today. A Swiss surprise, UBS takes a $774 million hit from the implosion of Archegos Capital Management. HSBC bounces back. Europe's largest bank posts its best quarter since the pandemic began. More than 400 million loans loss reserves are released, and spoiled by success, well, Tesla earns record profit and even made money off Bitcoin, but shares are down in early trades. Well, let's get straight to the markets. There's quite a lot going on in terms of corporate earnings, Kaylee. I think we're just starting to be in the swing of things. So we also had BP, and then we really go industry by industry, looking at margins and what they're expecting for the future. What are you seeing overall in the markets?
Well, of course, Francine, expectations were really high going into this earnings season. That's what we're seeing play out with Tesla, a record profit not doing enough to see a reward for the shares. So markets really digesting all of these corporate results. Where that left us in the Asian session was really a bit mixed. You do have Indian stocks higher by about 1%, even as the virus worsens in the country. Chinese stocks were higher as well, but Hong Kong stocks a little bit lower, even though HSBC rose after its first quarter results. And then underperformance coming from the Nikkei in Japan. It's down about 0.5% at the close. Part of that is concern about pandemic-related restrictions. And then, of course, this move follows the BOJ leaving asset purchases and rates unchanged, but lowering its inflation forecast for this year to just 0.1%. After that, the yen is weaker against the dollar for a second day. It's sitting at 108.35, and JGBs on the 10-year are essentially unchanged. As far as the European session, it is a bit lower on the continent. Most indices are in the red. The stock 600 just fractionally lower. It's down by only around 0.1%. But within that index, it is financial services that is actually the biggest underperformer on a sector basis. And UBS creating a big drag there, down 2.7% after that surprise Archegos loss that Francine mentioned. The euro is weaker against the dollar, sitting at 120.58. And then in the London metals trade, I have my eye on copper continuing its rally. It is now sitting above $9,900 per ton. That is the highest in nearly a decade. As far as the U.S., how the session looks like it may pan out come the U.S. Open in about 4.5 hours' time. It could be another all-time high after the record reached yesterday for the S&P 500, with futures up about 5 points. In the Treasury market, yields moving up by just a basis point. We're sitting just shy of 1.58%. We do have a $62 billion 7-year auction coming later today, so we'll watch to see what the takedown of that is. The dollar is broadly stronger in the G10 space. And then, of course, I have my eye on Bitcoin continuing its recovery. We're sitting at $54,500 or so. Elon Musk and Tesla giving a bit of a boost to the cryptocurrency, Matt, because they say in the long term, they are definitely still faithful.
Yeah, interesting to see Bitcoin, Kaylee, also rising as the U.S. dollar rises. Of course, you showed the banks there, and we are firmly focused on the banks today. But let's take a look at what's coming up today. Other than that, the main OPEC Plus monitoring committee meets a day earlier than planned. So watch the oil patch this morning. The UN hosts reunification talks for Cyprus in Geneva, bringing together the Greek and Turkish sides. And then we will shift our focus to tech. We get Microsoft earnings as well as Alphabet after the bell. So, right now, Fran, we're really focused on the banks. There's so much going on with HSBC earnings out, UBS and Nomura disclosing more Archegos losses, but we're going to shift our focus a little bit later today back to tech and those big stocks that have really powered this rally.
Yeah, it's really interesting, Matt. So, on HSBC, they did better than expected. And actually, the chief financial officer says, look, we've cut a lot of costs, but we should continue cutting costs just to make sure that we're on top of it. UBS, it's, of course, another story, beating estimates, but then they had that windfall from Archegos that no one really knew about. So shares falling this morning after the bank reported this meltdown. It cost the Swiss bank $774 million. The blow comes as the lender reported first quarter profit of $1.8 billion, exceeding analyst estimates. Well, UBS chief executive Ross Hammers told Bloomberg's Manus Cranny that the bank plans to review its risk management.
It's not only that we should demand it, and all banks should demand that, it's also that we should look at regulations to come in here in order to ensure that an idiosyncratic event like this doesn't happen again.
Well, with us now from Zurich is Bloomberg's Manus Cranny. Manus, lovely to see you actually out and about because it's one of the first times that you're on location. It was a great interview, and Manus, you really went hard in saying, well, why did you not disclose this before? What did the CEO say?
There's a very important word here. It's called required. What is required of you as opposed to what might materially impact your numbers. And you've laid out the numbers. Now, Hammers was very short and exacting. I was not required to make this disclosure any earlier because it didn't bring down and implode the quarterly numbers. $1.8 billion is what you said the bank made for the quarter. Wealth management firing on all cylinders. So the material impact to the bottom line was not so significant. Yes, $775 million. Let's call it what it is. $750 million. I was not required. I think this is the debate in the market between you might not have been required, however, it's not an insignificant number, and to that end, maybe you should have come sooner. Morgan Stanley took a hard time taking the same road. But I think, Francine, there's a message here as well from Hammers, which is I will investigate, I will not wholesale deleverage, I'm not going to throw the baby quite proverbially out with the bathwater, but I am going to look for more disclosure, more detail, understand counterparty risk, and if the call comes from the regulators for more disclosure, it sounds like this institution will be squarely behind them.
All right, Manus, thanks so much for joining us. Bloomberg Daybreak anchor Manus Cranny there on location. We're going to bring you more of his interview with UBS CEO Ralph Hammers, as well as Bloomberg's conversation with the HSBC CFO Ewan Stevenson later on in the hour. Right now, let's get to Tesla. It reported strong numbers in the first quarter with record profit and even positive returns, a whole lot of them from Bitcoin. But it didn't seem to impress investors with the shares falling in early trading. Joining us for more on what disappointed is Bloomberg's Danny Berger. Danny?
Man, it's not even so much that things disappointed, is that they just came where people were expecting them to. Elon Musk did say that there was a lot of demand for the cars, but without specific numbers, you get this shrug from investors and even a bit of a sell-off. Pre-market shares down 3%. Now, in terms of the actual reporting of the quarter, it's clear that Tesla has gotten better and more efficient at building cars. The bottom line also helped by a record number of regulatory credits they sold and Bitcoin. This is definitely what has the market abuzz. $101 million worth of Bitcoin sold. That again added to their profit. Now, Elon Musk talking about on Twitter and the CFO talking about on the conference call that this is something of a liquidity strategy. It's a place to put cash when yields are low. Though, Kaylee, you really have to ask the question, how does Bitcoin function as a liquid asset if it's mostly owned by Bitcoin whales, and at the same time, part of the reason people like it is the scarcity of the asset itself?
Very good questions. Bloomberg's Danny Berger, thank you so much. Now, as Danny and Matt mentioned, Tesla is lower in pre-market trading. I want to take a look at some of the other stocks on the move in early hours as well. Just when you thought we were done with the Reddit phenomenon, we're not. We do, of course, have a reference on Wall Street Bets last week for Microvision, which is a LiDAR firm. It surged 63% last week, 47% yesterday, and in early hours this morning, it is up another 12%. GameStop, of course, was the original poster child for Reddit stock mania. It is also higher by about 8% after completing an equity offering of 3.5 million shares. And other meme stocks like Zomedica and AMC Entertainment, they're up 9% and 3.5% respectively. So those Reddit traders, Francine, definitely still active in this market.
Meme stocks, I love that. We should be the meme show. Coming up next, he maybe also looks at meme. John Normand, JP Morgan head of cross-asset fundamental strategy. And then it's also day 2 of the Bloomberg Green Summit. We'll discuss climate change, issues with the Enel Group chief executive, Francesco Starace, UN Special Envoy for Climate Action and Finance, Mark Carney, and European Commission First Vice President Frans Timmermans. You can look out for those interviews throughout the day. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, in determining economic growth, one of the key factors is financial conditions. And we can see now from a Goldman Sachs tracker that they have fallen to the easiest level on record. You've seen a ton of bond issuance, of course. We haven't seen the bank lending that you may have expected, but financial conditions are so easy ahead of the Fed meeting. One of the questions that may come up is whether it's time to start to finally talking about tapering. Francine?
Yeah, I mean, this is the million-dollar question, and that will, of course, underpin everything that you do in asset classes. So joining us now is John Normand, JP Morgan head of cross-asset fundamental strategy. John, if we just start maybe with, a difficult but also very basic question is, when you look at inflation, when you look at, the Reddit users, when you look at a possible falling out of cryptocurrency, what worries you the most, for May 2021?
So the number one worry for May 2021 is that we start to see the economic indicators that are most important to the Fed, like the unemployment rate, like core inflation, move in a way that could motivate the Fed to start talking about tapering in June, even though they wouldn't actually taper until maybe the turn of the year, beginning of next year. If you do see big moves down in the unemployment rate, like maybe a percentage point a month, if you see core moving meaningfully above the 2% level, then I think it's going to start to tick the boxes that the Fed needs to see ticked to entertain the notion of tapering, and we could start getting messaging around that this summer. I don't know that it's precisely going to come in the month of May, but I think as the months progress, as the expansion really gathers a lot of vigor, you're going to see that debate really kind of move to the fore of the Fed, and the bond market is not priced as if that debate is going to happen anytime soon.
But so far, if you look at earnings, I mean, they seem like a really good crop. Even the banks, apart from the slight hiccup for UBS that no one was expecting, seem to be really on solid footing.
So the earnings are fantastic. This is a usual sort of event when the economy is picking up. Not only do earnings grow at a double-digit pace, but they tend to beat even elevated expectations. So that all is very supportive, I think, of the overall narrative of equity outperformance of bonds, even if some of the reactions in single stocks on a given day are not what maybe some investors were expecting. As long as earnings growth is going to be double-digit, I think it's a very easy case to make that equities are going to be beating fixed income markets. I think the bigger question you have to ask is, why isn't the rotation happening? Why isn't value outperforming growth on a consistent basis as the numbers continue to beat expectations? I think that's mostly related to some of the influences from the fixed income market, the fact that yields are pretty soft here, and also the commodity prices outside of the metals markets, i.e. the oil price is moving sideways. But I think yields will go up. I think oil will move up. I think these fixed income influences are going to support the value rotation, and then you're going to start to see a very classic sort of improvement in asset markets. Not only do they go up, but the internals look very consistent with a strong recovery too.
John, we do have commodities prices, though, really on a tear here. If you take a look at the chart of the BCOM index, it's the highest level we've seen commodities prices since 2016. That affects, of course, input costs, and it affects inflation. Is this a problem the Fed has its eye on?
No. Insofar as it's commodity driven, it's really the headline moves, the headline measures which are going to move the most. There is going to be an improvement in core, but very likely to be transitory unless wage growth really starts to ramp up. So I think the Fed is going to welcome what's happening in commodity prices. It's just sort of confirmation that there's a very vigorous demand recovery, but I don't think it means anything for their thinking around inflation. That's really about core. Obviously, they strip out commodity prices when looking at core, and they probably won't even pay attention to core until it's been above 2 for at least 6 months.
So that strips out food as well. The idea is that those prices are transitory, but this Fed seems pretty worried about the marginalized, especially those who are hardest hit by the pandemic, and food inflation has been on a tear as well. In fact, if you look at this chart, it shows you that food inflation is at the highest level that we've seen it since 2013, and that makes up a huge part of the budget of people who, were hit by the pandemic, who lost their jobs, who aren't earning very much. Doesn't the Fed need to pay attention to food inflation at these levels?
I don't think the Fed needs to pay as much attention to food inflation as some EM central banks need to pay attention to food inflation. It's not as large a part of the typical U.S. consumer basket or even the overall CPI basket compared to some of the EMs. But I think the way the Fed would look at that is to say that the best thing they can do for lower income households is to make sure the job market is as strong as possible, because they can sort of more indirectly influence the job market through keeping the rate of borrowing costs very low, as opposed to whatever influence they could exert on commodity prices. They have essentially no ability to influence that. That's a price which is set in a global demand environment and by supply conditions which are way out of the Fed's remit. So all they can really do is hope the jobs market picks up, hope that wages increase as a result of that, and it kind of delivers the purchasing power that can cope with the rising food prices.
Well, John, of course, commodity prices are influenced by the strength or weakness of the dollar, and the strength or weakness of the dollar is influenced by the Fed. Can we officially declare that period of dollar strength we saw in the first quarter over? Is it weakness from here on out?
No, I don't think so, but neither do I think the trade-weighted dollar has much of a trend over the next year. To me, the big currency move in the trade-weighted index is caught between some conflicting forces. You have this prospect of higher bond yields as the economy ramps up, as inflation improves, as the Fed tapers. But the current reality is that the dollar is a zero-yield currency as the current account deficit gets wider every month. And I think that tension manifests itself in terms of very erratic movements in the trade-weighted index from quarter to quarter. where right now the index is under pressure because bond yields have come down. But as the Fed starts to give a signal this summer that it's talking about tapering, I think you'll see 10-year bond yields move up to what I think is a fair value of them, maybe 2% by year end. This is going to cause the trade-weighted index to move up, but essentially back in its range and back to the old highs that it reached in Q1. I don't think this is really the big area where global investors are going to make money over the next year. It's kind of a short-term influence on a lot of other markets like EM, as opposed to being kind of a big independent source of alpha over the next 12 months.
John, do you worry about liquidity, or is that a problem for 2022 and beyond?
I worry about liquidity in the sense that a lot of investors think of asset prices as being very much supported by central bank balance sheet expansion. That's not everything that's going on. There's clearly a fiscal dimension to what's supporting asset prices, and that fiscal dimension is going to stay in place for the next couple of years, independent of what the Fed is doing on the balance sheet. But the fact that the pace of balance sheet expansion is going to diminish over the next year as the Fed starts tapering next year is going to, I guess, reduce this sort of support. It doesn't imply to me that equities are going down, the credit spreads are going to widen. It's just that the positive impulse from central bank balance sheets is going to diminish over time. It just sort of means a flatter profile of appreciation in various asset prices, and it means more bear market sort of phenomenon in the bond market going forward. But I think the big asset classes, equities as well as credit spreads, are still going to be fine, even with a slower pace of liquidity addition.
John, thank you so much. John Norman there, JP Morgan, head of cross-asset fundamental strategy. Now, tomorrow, Bloomberg has special coverage of the Fed decision and press conference from the chair, Jay Powell. That starts at 2 p.m. in New York, 7 p.m. in London. So watch out for that. We'll have full coverage ahead. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Countries that entered this crisis with limited fiscal space with more vulnerabilities need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Wednesday, the Fed decides. The Fed is on hold waiting on inflation. But for how long? Coverage begins 2 p.m. on Bloomberg Television.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg First Word News and President Biden's proposal to boost the capital gains tax would hit individuals earning $1 million and married couples jointly earning the same amount. Now the president is set to unveil his plan tomorrow. It would almost double the capital gains rate for some taxpayers. Meanwhile, France and Germany support the Biden administration's proposal of a 21% minimum tax on multinational corporations. Now, global economies have been discussing such a tax for years, so the precise rate could still be a sticking point. Well, France is also concerned about whether the proposal where the biggest companies pay their taxes would actually cover the digital giants as well. And the latest U.S. Census figures are good news for Republicans. Well, Texas will gain 2 seats in the House of Representatives under the new population numbers. Meanwhile, states in the Northeast and Midwest will lose 7 seats in a shift of political clout to Republican strongholds. California will lose a seat for the first time ever. And finally, Americans who've been vaccinated may soon get clearance to take off their masks outdoors. Now, according to CNN, President Biden is expected to announce as early as today that the CDC will issue new guidance on wearing facial coverings outside. Some public health experts are calling for less strict guidelines as warmer weather arrives. I mean, I know, of course, Matt and Kaylee and I have been talking about this quite a lot behind the scenes as we're all in different parts of the world. And actually, the way that some of these guidelines have really been used, for example, in Europe, even the UK, France, and Italy, Germany, and the US have been completely different.
Yeah, all very different, but you know, I think the fear level was so high that a lot of people wore masks outside anyway. Of course, if you're vaccinated, your chances of getting the disease are incredibly low. And then if you're outside, it's unbelievably rare for you to get the disease. So it doesn't seem like it's at all necessary. It's more of a performative thing.
Well, that's the thing, Matt. It was the shame factor, at least here in New York. I was out for a run early in the pandemic and was yelled at for not wearing a mask. And it's hard to run with a mask on. I'm really looking forward to the day I don't have to do that, Francine.
Yeah, I am not a virologist, so I just follow the rules. Now, coming up next, more surprise hits from the collapse of Archegos. We talk banks. This is Bloomberg.
So our focus is odor detection, and this is because no matter how you're bound, what container you're in, you're still producing and releasing odors, and we're kind of building off of wildlife detection dogs.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, a lot going on, especially with the banks. I enjoyed our conversation, Matt, with John Norman of JP Morgan, who was saying, look, if you look at the earnings blowouts, they're just very, very strong, which is something that is kind of expected in this economy that's picking up, but it's really what the Fed does that worries markets if they start talking about tapering.
Yeah, that's a great point. I mean, earnings better be strong, right? If you can't bounce back from those kind of base effects, then you have a real problem. But the Fed, I think, is what everyone is so focused on. John, of course, talking about the importance of the Fed's mandate. So we know they're watching inflation closely. We know they're watching unemployment closely. But at some point, they're going to have to start talking about tapering. And the question is, what is the market going to do then?
Yeah, and what is the market looking at now? I guess, Kaylee, they're really focused on some of the earnings we had.
Yeah, it's definitely an earnings focus. To your point, Matt, yes, earnings better be strong because that's what the market was expecting. It already had priced in so much. Expectations were really so high, and we're seeing, even if you meet the bar, that's not necessarily enough. So where that leaves us in the European session is a touch lower on the stock 600. We're down by about 0.2%. Of course, a big drag within the stock 600 is the financial services sector because UBS is underperforming after a surprise Archegos loss. Here in the U.S., we are coming off an all-time high for the S&P 500, and it looks like we may add to that come the opening bell in the U.S. in about 4 hours' time, with futures up about 5 points. We're looking at a 1 basis point move higher on the 10-year Treasury yield. Nothing really to take note of in the bond market. We're sitting at 1.7% at this point. Where I am really taking note of is in the commodity complex. Copper futures in London at $9,900 per ton. You are seeing that commodity complex really rallying if you take out oil, but focus on the ags and industrial metals. A lot of concern about supply constraints colliding with increased demand as the economy recovers. Now, as for some more idiosyncratic stock stories, I was talking about how the bar is really high when it comes to earnings, and that is really evident in the price action for Tesla this morning because it reported a record profit, and investors are saying, yeah, so what? The stock is down 3%, maybe a little bit of disappointment because the company didn't provide a specific 2021 delivery target. But while Tesla is lower by 3% in pre-market trading, we are seeing some other EV stocks or stocks tied to EVs rallying. Arrival Group is up 8%. Churchill Capital, which of course is the SPAC that bought Lucid Motors, an EV maker, is higher by nearly 5%. And then ChargePoint Holdings, which provides technology to charge EVs, is higher by about 2.5% before the bell, Matt.
All right, definitely focused in on those EV and EV-related stocks for sure. But I wanted to bring up a chart that goes to what Fran was talking about at the top here. This is the expectations for the first rate hike according to Fed funds. And you can see it's starting to get higher and higher and higher. So we're looking for December 2022, December 2023, but the most important, December 2021, is the white line here at the bottom. For those of you on radio, I will tell you it's steadily rising. And this is, I think, what the market, Francine, is really focused on. Are we going to see a rate hike sooner than later?
Yeah, perversely, it would maybe freak out the markets, but actually could help the banks. And that's what we're talking about next. We've been speaking to HSBC and UBS chief executives this morning. It's two different stories from the banks today. HSBC Chief Financial Officer Ewan Stevenson says they had the best quarter since the pandemic. That's mainly on cost cutting. While the UBS chief executive Rolf Hammers says the bank will be reviewing risk management procedures after a surprise hit tied to the collapse of Archegos.
It's not only that we should demand it, and all banks should demand that, it's also that we should look at regulations to come in here in order to ensure that an idiosyncratic event like this doesn't happen again.
When you look at our core lending platforms, mortgages have continued to remain robust in places like Hong Kong and the UK, and we're also seeing a really strong recovery now coming through in the pipeline and commercial. So pleased with the results and cautiously optimistic on the rest of the year.
Well, joining us is banks experts Filippo Aloati. He's senior credit analyst at Hermes Fund Managers. Filippo, as always, thank you for joining us. When you look at the banks, there are two things. First of all, it's an exercise of cost cutting. The other is actually who else is out there being exposed to Archegos. What does it mean for some of the corporate stories that you like?
Yeah, I think we're all becoming Archegos expert, because I mean hardly a day goes by without any new twist in the saga. And of course, I mean this event UBS is taking a bit of a shine off a quarter which was quite strong. I think in fact was one of the strong quarters since before the global financial crisis.
Is there a danger that European banks in general, I know this is a wild statement, but are just taking too much risk because they're trying to compete with Wall Street? And what does it mean for investors?
Yeah, there is always. I mean, the market are ebullient, as it's been said earlier on the program that I mean there is a lot of risk taking, and this is fueled by the Fed. It also fueled by the bond buying spree of the European Central Bank. I think also always in history in this type of event, also one needs to keep an eye on the risk management, because otherwise you have the Greensill, you have the Archegos of this world. Yeah.
Filippo, should bankers feel safe in their jobs right now? We're hearing more about more cost cutting. Should kids out of university be looking to the financial industry? Is job growth going to come back?
No, I think actually the perspective are quite dim, to be fair. And I think also there is a almost Herculean challenge to bring down cost. I think even a well-run bank like UBS, so they're trying to reverse 1 billion of cost cut into more tech investment. And I think so this is probably more than a decade-long story. So there will be probably less people working in banks, so the process will be more automated, and I guess also a lot of repetitive tasks also will be essentially done by computers.
What about lending? Filippo, Cameron Kreis wrote a piece yesterday saying that with all the QE the Fed is doing, bank lending has just fallen off the cliff. How does it look here in Europe?
Yeah, I think it's likely it's probably the reverse of the matter, because also a big chunk of the lending over the last year in Europe has been done by quasi-government entity. You can think of the ICO in Spain, or to some extent the KfW in Germany. Banks also in Europe, unlike in America, they're more worried about the credit cost, and therefore, I mean, they can just take only a portion of this new lending. So it's very different, say, picture from the United States.
Filippo, when you remove Archegos from the equation, which of course is a little bit difficult to do, but for both UBS and Credit Suisse, when you X that out, the results in the other segments of their business were quite strong. What is the read-through from those fundamentals from the Swiss banks to the likes of Deutsche Bank, which we're getting tomorrow?
Yeah, I think also the read across is that the franchise is really working, because I think very few institutions would have taken the kind of loss Credit Suisse took on Archegos and also Greensill, and brush aside in a couple of quarters like Credit Suisse did. Of course, also there's going to be a review of the business, but I think also to me it's a testimony that the new incoming chair has just to review the business, because the machine is working. It needs some refining in terms of risk management. Also Deutsche, so we'll see tomorrow whether they surprise us with Archegos, but I guess also for once also this seems to be on the front foot in terms of risk management. So I think it's positive for them.
When it comes to, obviously, there's idiosyncrasies for all of those banks, but when it comes to the attractiveness, the value proposition of European financials, do you still expect them to benefit from this rotation we're seeing globally into value, or are some of these idiosyncrasies, if I can get my words out, a little bit too much for investors to bear?
No, I think also the rotation trade into banks and utility from tech also is here to stay, and I think also the valuation, even though they have recovered from November, so when with the first news of the vaccine also broke out, I think also they're still quite interesting. For example, the bank like Credit Suisse is trading at the same multiple of some Turkish banks, so I think it says a lot because I mean Turkey, of course, is a kind of basket case in terms of macro. So I think also there is a lot more left into the rotation trade, and I think also there is also a lot of self-help the banks can do, especially in Europe, in terms of charging the retail depositor base. Like for example, today Danske, a couple of weeks ago, ABN AMRO, or more to that. Yeah.
Yep. All right, Filippo, thanks so much for joining us. Great to get your insight here. Filippo Alawati is Senior Credit Analyst at Hermes Fund Managers. Now, we have some breaking news on the economy here in Germany. The country is raising, the economics ministry, raising its outlook for growth from 3% to 3.5% for this year and up to 3.6% for next year. Economy Minister Peter Altmaier says that the economy is strong, robust, and ready for a new start. And if they just got those vaccines out, we would have a serious fighting chance. We're going to continue to talk about growth, the virus, the pandemic, and we're going to focus in as well on taxes in this program. The Biden administration wants to beef up the IRS, and you may get audited. This is Bloomberg.
Right now, you know, the mask fashion is not really favorable to makeup, but we know that, and we are convinced that when the pandemic is over, when people get back to a normal social life, when they meet each other, they party, makeup will bounce back.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Q1 had some of the most difficult supply chain challenges that we've ever experienced in the life of Tesla. Insane difficulties with supply chains, with parts over the whole range of parts. Obviously, people have heard about the chip shortage. This is a huge problem.
That was Tesla CEO Elon Musk speaking yesterday after the company reported record profit in the first 3 months of the year and even made money, more than $100 million off of Bitcoin. But investors are not impressed with Tesla's big quarter. Joining us now to tell us why is Bloomberg European Autos editor Craig Trudell. Craig, It looks to me like people wanted to hear more exciting news about Tesla's outlook for production, for delivery, higher targets going forward this year, next year, and so on. Is that why we're seeing the sell-off, that they didn't get that?
Yeah, I think that's right. I mean, everybody was really happy with the first quarter deliveries numbers that they reported a couple of weeks ago, and that sort of got a lot of people excited about just how much more than 50% growth that they've talked about as being the sort of annual increase that they expect over a several-year horizon. How much more can they do this year? And the company really didn't go there whatsoever. So a lack of clarity on that, compared with that bit of caution that you heard from Musk about just how much of an issue the chip shortage is going to be for the company. On one hand, Tesla put in its shareholder presentation that it was able to sort of navigate around those issues, but you heard from Musk a real concern about the forward outlook, and we've heard from a lot of car companies at this point that the second quarter might actually be more challenging than the first quarter in terms of how much the semiconductor issues are going to sort of loom.
Craig, I can't get over the fact that they made $101 million just by trading Bitcoin. I mean, what is this?
It's a really strange thing too, because I think a lot of people feel a bit conflicted about the idea that on one hand the company is talking about we're big believers in Bitcoin, and yet on the other they're buying and turning around and selling in the first quarter that they've disclosed purchasing the currency. And so you saw a little bit of pushback on Twitter about that, and Musk kind of mounted a defense a little bit of we wanted to prove liquidity, and some people are giving him a little bit of a hard time about that's still a bit of a questionable thing. It looks more like they're trading as opposed to buying in.
They have so much cash, though, now compared to previous years. It doesn't matter as much. What I thought was interesting, Craig, is he said there's a parts shortage beyond even chips. And I know, I'm trying to buy rock rails for my truck. I can't get them. I'm trying to buy headers for a new BMW. Can't find it. CNC rear sets, they take weeks to deliver. There's a real parts shortage, supply chain problem, even beyond the chip industry, isn't there?
There is, and we're hearing about that from a really diverse set of companies. Michelin recently talking about real supply chain issues that they're having. We've heard a lot about other components that had issues as a result of the Texas storm a couple of months back. So this.
Hello, traders. It's time to sell short euro. I'm placing an order to sell short 120.66. You still have time to sell short at 120.66. So if you're looking to trade this pair, come on, you still have time. Hopefully it will get filled quickly. Okay, if you want to find out more about how we trade, you need to get the strategy. It's the strategy is available on company.co.uk. Okay. By the way, you can check our video, The Art of the Day Trading. This is the video, snapshot video explanation how we trade, how we buy during several days positions, and then we'll sell, how we hedge positions, so you can find out more information about how we trade. Otherwise, keep following our trade, and as I can see, I'm looking at right now to my trading screen. We're still holding order, and okay, we filled position open on euro 120.66. Okay, I'll speak to you later, guys.
This is basically going to kick off the whole week.
From bank earnings really have to be front and center, to tech earnings.
The COVID boost is gone.
Bloomberg breaks the numbers as they drop.
Breaking news, Bank of America seemingly reporting earnings, and those trading beats are significant.
And furthers the conversation.
Big portion of the economy is up and operating very well.
There definitely is more to go.
No one delivers the data faster.
We need to talk about earnings in America. There's a pretty clear trend emerging.
Bloomberg Television, your home for earnings season.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This year, with the COP conference, with the Americans stepping up after a few years of absence on climate leadership, it's a great time to see the kind of momentum we're all building.
Prime Minister, you've increased your targets, but you're still quite a long way off from the UK or the EU, for example. Can Canada actually do even better than the targets?
Well, I think it's really important to, first of all, understand that everyone's in different circumstances. We have already done, over the past 5 years, a tremendous amount of work on moving forward to reach our existing targets. So it's not just about putting targets, it's about having a plan for them. We had an old target of 30%. We built a plan that got to 31%. Then we moved the plan to 36%. And now we're talking about a target of 40 to 45%. So we know that, for example, phasing out coal and coal generation is one of the things that the Americans are going to be doing. We've already done that. That's already built into our plan. So as we get more and more aggressive, we have to rely on things that we're doing that other people aren't yet doing.
Prime Minister, a lot of people, especially climate watchers, are disappointed at some of the efforts that Canada has put in place. Now, we'll talk about your new targets, but even if you focus on those, you target a 40 to 45% reduction. That's relative to 2005, which really flatters your efforts. If measured against the 1990 benchmark using Kyoto Protocol, then the reduction would be much lower. What do you say to the critics that think Canada is greenwashing?
Oh, everyone needs to continue to do more, but I think the fact that we have one of the realest prices on pollution of all our peer countries, that we are at the same time an exporter of energy, a producer of energy, and that is a challenge that not all other countries have.
Well, that was Justin Trudeau, the Prime Minister of Canada, speaking to me as part of this week's Bloomberg Green Summit. You can still register and watch the full conference online at Bloomberg.com. Now, there's, of course, quite a lot going on in the markets, but away from the markets, it's all about President Biden and how he's funding some of the deficit, seeking an extra $80 billion for audits of high earners by tax authorities. Now, that's according to the New York Times this hour. Let's get straight to editor-at-large Marty Schenker, spent, of course, many years in Washington, D.C., and he joins us now, our tax expert. Marty, when you look at actually what we've learned from this article, it's also, if you're a married couple and you earn a combined $1 million, you'd be treated the same.
Yeah, that was something that was kind of unclear after the press conference yesterday. And frankly, the Biden administration has almost not been clear on whether this is combined household income or individual income. But late yesterday, they clarified this would be for household income of over $1 million. But they still claim it's only 0.3% of the population would be affected by these tax increases.
The interesting thing, I think, Marty, is beefing up the IRS, because there's a multiplier, right? For every $1 you give the IRS to try and get more money, they can get something like $3, $4, even $5 back.
Yeah, they, you know, this is a theme that other administrations have made, that the investment in the IRS pays vastly more back than you spend. And there are some estimates, the Biden administration, according to the Times, expects something like $800 billion.
And it's time to play Stop on Profit at 120.64. Let's play Stop on Profit at 120.64. Just right here. Okay. Whatever happens, you will finish this trade, you will close this trade with profit. Stay safe. I'll speak to you later.
To go big on the IRS will actually happen, but it's a nonpartisan issue. Both sides of the aisle think IRS enforcement is important.
Thank you so much. Our editor-at-large there, Marty Schenker, and of course we'll watch the story that will run and run and run. Now, look at what else we're watching today. I know there's a lot going on, and Kaylee, you're all over the technology stocks that are reporting later today.
Yeah, the mega caps, more of them coming after the bell, Francine. Alphabet and Microsoft are due with their results. And what's interesting, of course, as I've been talking about this entire hour, is how high expectations are. You have Alphabet up 31% on a year-to-date basis, Microsoft up about 17.5%. So a lot is already built in. The question is, can they meet those high expectations or even exceed them? Or are we going to see a similar phenomenon as we're seeing with Tesla today, where even a beat isn't necessarily enough to see the stock rewarded, Matt? So very interesting to watch.
Can I jump in here?
Yes, you may.
I am searching everywhere for a vaccine. I went to the Erica Hess ice hockey stadium the other day where they're giving out a ton of vaccines with appointments just to see if they had any leftovers, and they said no and sent me away. I'm starting to worry I won't be able to get home for the 4th of July, which is like a long way away. But Germany said they're going to start letting people get vaccines regardless of age or health condition in June. It seems a little tight to me. I'm a little bit worried.
Well, I guess it depends, Matt. I mean, I think I saw a story saying all adults vaccinated by June. I don't know whether it's the first or the second shot, but if you're lucky, you get the J&J and it's one shot and done, and then you have the travel passport that everybody wants. I'm looking at Archegos.
Here all adults will be allowed to get a vaccine by June, right? But they won't be finished.
Maybe they don't have time to book in. Depends on when they start in June, if it's early June, mid-June, or end of June. Matt, I'm looking at Archegos just because if you look at the total losses linked to Archegos with UBS, it's 10 billion overall. So we'll have a look at banks. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Okay, guys, that's it. Position closed at 120.64. Well done. You finished your first trade for today. And let's move on. Let's look for other chance, for other good opportunity to trade Forex. If you want to find out more about how we trade, why we place this order, how come we choose this price, you need to get a strategy. It's available on companyeye.co.uk website. Okay, let's move on to another pairs. Speak to you later.
can't catch up after going through a depressionary bust with this health crisis to suddenly having a runaway bull market.
We know this economic data is great. This is all reopening, fiscal stimulus. Well, how much does behavior change? We're all becoming behavioral scientists.
The real question is, beyond the summer, after we get this reopening-driven boost, how long is this going to sustain itself?
All eyes really are on what constitutes substantial progress right now.
What's this economy look like 6 months, a year down the road? And that's where I think you're going to see this real inflation, and it's going to be more persistent than people are currently pricing in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures this morning totally unchanged on the S&P 500. Here are the words of Morgan Stanley. Dreaming of reopening is easier than actually doing it.
Yeah.
Tom Keene, execution risk front and center.
Nice phrase, and it really buttresses up against some of the trends we're seeing this week. I know we go into earnings, John. You're going to talk Tesla and Microsoft today, but it also is a boom economy really punched up against interesting logistics. Just moments ago, palladium out to a record high. Some of these commodities go away. We're on, Joe Weisenthal mentions, John, we're on 10,000 watch on the LME on copper. I mean, there's some interesting supply-demand constraints within this boom economy.
The demand is good. Can supply meet it? And I think we got a flavor of that issue from Elon Musk and Tesla yesterday with the chip shortage. It wasn't a huge issue for them. It could be a big issue for other auto manufacturers too. And that's going to be the story, I think, for the weeks and months to come. A lot of people are focused on that. Big expectations. Can we meet those expectations with supply?
I don't suggest, John, that we're going to see commodities pop into the inflation watch. There's, some people saying really an ebb in the inflation worries. But what I would say, John, is on a Tuesday, it's a stew of information, and we're dying to get some clarity out of this. We don't have it.
Well, here's some clarity from UPS, Lisa. First quarter adjusted EPS 277. The estimate 173 is just one more beat in a big line of beats.
What's interesting, though, is a big line of beats, and markets are shrugging off all of those beats. Even Tesla's record quarter and the fact that they sidestepped some of the chip shortage issues, people are shrugging. The expectations are so high, which goes back, frankly, John, to that quote in UBS, which is the dream of reopening is perhaps easier to price in than the reality, which is fraught with all of these frictions which are coming to the fore.
Morgan Stanley. Mike Wilson will be unhappy. That was a Morgan Stanley quote. We'll get to UBS in a moment. Do you want to talk about UBS right now?
Sure.
What is material? What is material these days? If it's not $800 million.
861 million.
What is material these days?
Yeah, and why did they not reveal the fact that they did have losses tied to the Archegos hit? And that's the reason why their shares are suffering as a result. What are people missing in terms of risk management, John? And that, I think, has been what's hitting Nomura as well as Credit Suisse.
What's your take on that, TK? Nomura 2.3 billion. Credit Suisse a combined hit of 5.5 billion. Morgan Stanley almost $1 billion, not material. UBS 774 for this quarter, 774 million, not material. Is this in the context of how earnings looked, what the earnings profile was for that quarter? Is it relative to what your competitors lost? I don't get it anymore.
Here's the way it works. You do leverage and you're successful. So you do it again and you leverage up further and you do it again. I would suggest that the leverage up by these firms, their exposure, if you will, to a family office, come on, it's a hedge fund. Their exposure to it, John, was very simply once successful, twice successful, 3, 4, 5 times, boom, and then you're not. And you see that constantly when you study failed hedges. I would go to gold mining hedges as one of the examples of that.
Tom, don't you think it's a bit rich, though, if a bank comes out and says we weren't required to disclose the hit until we reported the earnings this morning?
That's a cultural
and at the same time, follow up by saying we need more disclosure from clients.
Yeah.
How would you feel as a shareholder about that? They want more disclosure from the clients, but they're not willing to disclose things like this ahead of time.
One of the little secrets, John, of this business is how corporations vary in their tone to shareholders. And you see it, you've seen it with this Archegos the mess.
Some of this has been a bit tone deaf. Here's the price action this Tuesday morning. Good morning to you all. We're shaping up as follows. In the equity market, there is none. Equity futures unchanged, 41.78 on the S&P 500. Call it 41.79. Euro dollar 120.69. Euro dollar coming in a little more than 0.1%. And in the bond market, yields higher by a basis point to 157.74. Do we call it a snooze fest, Lisa, as we kick off a Fed meeting down in D.C.?
Never. I would never call call it a snooze fest. I'll leave that to others who do that frequently. And I will say, frankly, there's not a lot of action in markets, but there's a lot of action in Washington, D.C. And frankly, that's where my focus is right now. 1:15 p.m., President Biden is going to be making some comments on the COVID response in the United States. People are expecting him to come out with new guidance from the CDC saying that if you've been vaccinated, you don't have to wear a mask outdoors. Potentially, even people who are unvaccinated might not have to wear masks outdoors to the same degree. Also possibly giving some indications of what the U.S. aid may be to India and other hard-hit places around the world. This is another thing I'm watching down in Washington, D.C. 2:30 p.m., a Senate Finance Subcommittee is holding a hearing on a fairer tax system. This is a Senator Warren special, and she's having a number of people testify, not among them Leon Cooperman, who actually rejected her ask to come join. But this, to me, will be interesting to see how much Democrats are united on raising taxes. We're hearing about the capital gains taxes on individuals or couples making more than $1 million, as well as tax hikes elsewhere. And then today, we're also going to be getting after the bell that roll of earnings, including Microsoft. A lot of people will be looking at their Azure cloud computing unit in particular, as well as Alphabet. Key look at how much advertising revenue picked up, given the fact that people are actually moving around more. And perhaps there's a little more to advertise, given that the world is opening up a bit.
Yeah, Lisa, I'm glad you mentioned Google. They sometimes fly under the radar here, but it'll be interesting to see. I refuse to call them Alphabet, which is maybe as dumb as Aberdeen. Let's do our last Aberdeen banner here, you know, off of Alphabet. I guess I could do that as well. We're comparing UBS with UPS. And well, John, there's thank you. There's one banner, John, for PS I want to talk about, which is United Parcel Service not providing 2021 revenue and earnings guidance. That, to me, John, is a little bit of surprise and maybe is a little bit of a tone of the American uncertainty on Q3, Q4.
Things will be good. Just how good? Maybe that's where the uncertainty lies right now.
No vol banner, John. That's it.
Thank you, Tom. Coming down from D.C., here's some news for you. President Joe Biden will require federal contractors to pay workers at least $15 an hour in an executive order designed to leverage government purchasing power to boost working conditions for low earners. The reporting coming from Ben Penn this morning ahead of that executive order. So, Tom, this is it, isn't it? This is the moment where we start to talk about higher labor unit costs, etc. Bank of America put out some nice research. Savita Subramaniam leading that team. The number of mentions of inflation on earnings call year on year have tripled. It's the biggest jump going back to 2004 when they started tracking the data. Tom, we're talking about raw materials, transportation, labor, all cited as major drivers of inflation, and many plan or already have raised prices to pass through to higher costs. That has got to be the number one issue in the coming quarters.
No question on the conference calls. And John, what's so important there is it reversion up to the mean, or do you go through the mean up to a truly greater inflation? And that's where the debate begins.
Let's bring in Jennifer Lee, shall we? BMO Capital Markets senior economist. Jen, can we start right there, just on how you're reading some of the corporate guidance around cost pressures, around the labor market?
Well, good morning, everyone. So this is where, as you're all saying, the uncertainty is lying. How much inflation is really being built up through the system? Like, if we were talking about this, like, say, 9 months ago, you know, a lot of people were saying that inflation is going to be very slow to come back. But we all know that at some point, when things open up, and they are opening up clearly, as difficult as some companies are having it, but they are opening up, price pressures are starting to rise. And this is why I'm always interested in watching things like the ISM surveys. Data are obviously clearly important, but what people are saying, what companies are saying out on the ground is very key. So again, one of the ISM surveys, like the manufacturing one, that have always been talking about, the respondents have always been referring to higher price pressures and finding how labor is difficult to come by these days, and they're paying more for wages and all that. So those sorts of comments, what companies are saying, I think is very critical to the inflation outlook, and we do see inflation perking higher in the months ahead.
Do you model in wage inflation as part of that new inflation?
We do. I mean, wage inflation is obviously part of the entire inflation picture, not just goods and services, which are also on the rise. But with labor shortages and people or companies struggling to meet this newfound demand, they need people to create these, to create these widgets, to be on the factory floor, for example, to be at the restaurant floor. And so in order to get more people, obviously they're going to have to start hiking wages and bringing in and introducing more benefits to lure people back into the labor force.
Does it still feel transitory, Jennifer?
A little bit, yes, because we're not all the way there yet. This pandemic is still, front and foremost on everyone's minds and everywhere in the world. So things are moving forward, but obviously it's going to depend on which area, which country we're talking about. In the U.S. Has been at the forefront and has been moving forward very quickly thanks to the fast pace of vaccinations. The UK as well. So things are opening up. So it's looking better. It's definitely looking a lot better this year. And then you have other countries who are not. Who are still struggling on vaccinations, like in Europe and in India, of course, and that's where things are still, I don't think we're not transitory yet. We're still at the beginning stages.
It's got to be the word of the year already. Jennifer Lee, thank you. BMO Capital Markets senior economist. Lisa Wright to ask the question. We've got a ton of demand. Can labour supply meet it? And arguably, Lisa, more recently, the entitlement spending, the fiscal effort of the last couple of quarters has arguably held back labour supply just as demand has really started to pick up. Now, you're going to have to pay up for that labour supply now, and the trend is just starting.
Well, this is a key question, and there have been a number of studies looking at whether some of the benefits have kept people out of the workforce for longer, or if it's people not going back to school, children and mothers staying at home, or things of that nature. That said, there clearly are these frictions, and a lot of people are looking to an immigration policy from Joe Biden. Why has he not loosened it up more, particularly for qualified immigrants, in order to meet the demand? Because right now it seems like there are longer lasting legs to some of these supply demand constraints.
Thank you, Lisa, for fighting my cause, getting me back into the country. It means a lot. Tom, on a serious note, margins. You forget I'm the foreigner too. Tom, let's talk about margins this year. Demand's going to be great. We know that. We know that story. And I think this is what Morgan Stanley's trying to get to. This is the execution risk. It's around the margin story. It's around the cost pressures. It's your ability to meet that demand. That's a really difficult equation right now.
It's sector to sector. It's
agreed,
that simple.
Agreed.
I mean,
and within sectors too, Tom.
Yeah, yes, well said, within sectors as well. And what's so important here is the new tone of active management is not what you do, but avoiding the minefields really seems to me to be the theme here. I don't think the minefields are Microsoft or Google or Apple or Amazon. Somehow they're going to have margins that are pretty good.
Coming up, I think we all took note in the last couple of days when Chris Verona, Strategas, got a little bit more cautious.
Yeah.
We're going to follow up on that with him in the next hour. Looking forward to that. Equity futures up 2 on the S&P, basically unchanged, and the bond market up a basis point to 158. From New York City this morning, good morning. Tom Keene, Lisa Abramovich, Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Biden is expected to sign an executive order today that would raise the minimum wage for federal contractors to $15 an hour. It's currently $10.95. A new $15 wage would start next January. The latest U.S. Census figures are good news for Republicans. Texas will gain 2 seats in the House of Representatives under the new population numbers. Meanwhile, states in the Northeast and Midwest will lose 7 seats in a shift of political clout to Republican strongholds. And California will lose a seat for the first time ever. Americans who have been vaccinated may soon get clearance to take off their masks outdoors, according to CNN. President Biden is expected to announce as early as today that the CDC will issue new guidance on wearing facial coverings outside. Some public health experts are calling for less strict guidelines as warmer weather arrives. And more troubles for British Prime Minister Boris Johnson. Allegations of sleaze and incompetence in his government have picked up. Johnson denied a claim that he had said he would rather see bodies pile up than order a third pandemic shutdown, despite multiple reports. Meanwhile, ITV reports that the Conservative Party had loaned Johnson the money to refurbish his government residence. That's a highly unusual arrangement. And investors don't appear to be impressed with Tesla's big quarter. The electric car maker earned record profit in the first 3 months of the year, sidestepped an industry chip shortage, and even made money off Bitcoin. Still, shares are lower in pre-market trading. Tesla has to deal with these lofty expectations after its stock rose some 8-fold last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.